Let me make sure I have audio on YouTube as well. Okay, so we're testing some live. This is sort of the first time that we're going to do sort of a live stream test on YouTube as well. So this is also up over there. I'm going to try to put the link to that in the nest if anybody wants to test it out, see how it sounds, make sure people can, other speakers can be heard as well. Yeah, so we're going to see that and see how that goes. Of course, that video, that'll also be the nice place where people can go and, you can subscribe to that channel. That is going to be the Proven Reserves channel on YouTube. And going forward, we're just going to have all of our spaces and all those things like that is going to be up there, and they'll just be on YouTube from this point. So I think I finally figured out my streaming demons. I just, whatever. I just hope the audio works. We'll see. So.
So we're moving to Tuesday, it sounds like.
Yeah, the poll results for that were pretty conclusive. It seems that about, I'd say 75% of the audience seems to be pretty much fine with that. So I don't think we're going to have any issues. We might move it back to Sunday after football season. We may just stick with Tuesday. Who knows? But it was just brought to our attention that we would be competing with Dragons football and whatever else, so moving it to Tuesday just seemed to be a good idea, so we'll go with
Kraken and wild Krakens and beasts and stuff like that too, right?
Yeah, pretty much. That's we'll see. Yeah. But anyway, I'm gonna be kind of a little bit all over the place just because I'm trying to I'm going to sort of be managing this stream. We may keep this stream open for just an hour, and then I can, we'll see how it's going. But once I figure out how to put a link back up in the nest again, that'll be great. So give me a moment there, everyone.
So Australians, how are we doing on the ASX? Anything exciting, or I just can't see it at the same time right now, so I don't know how it's opening right now. Somebody tell us. Unless it's bad, then don't say anything.
Okay, I think that link should be in the nest at this point. So, or at least I tried to put it there. We'll see how it goes. So.
We've just dropped about 5% on all uranium stocks this morning, but that's given for a Monday.
Morning, guys. Can you hear me? Morning, guys. Can everyone hear me?
Yes. Sorry.
Yeah. Good. Okay. Yeah. No. I'm just. It's opened. Everything's pretty much in the red. Not a lot of volume, but we've got the likes of EL8 down 11.5% on pretty much in the first 5 minutes of trading. Bannerman down. Everything's pretty much down. As expected after the Dow on Friday nights. Friday, your time. So, yeah, I just think it's, we had that Japan news, and it's all, the rally's been pretty much short-lived. Chapman and I had a little sort of chat about it, and, I think nothing wrong with shorting them after a big day like Friday. So, I did a little bit of selling on Friday and bought them back on. I've already bought the my EL8 back this morning. So it's always a chance to make a little bit of money. And look, in the long run, I'm still not worried. When I say I short them, I don't do it my core holdings. Just little pack parcels I trade here and there. So it's an opportunity to make money. This volatility. So you got to try and make the best of a bad situation, I guess. But look, in the long run, not concerned at all. Like I was saying to Chapman, and some of the other guys, we're still waiting, but I really don't think it's there's it could happen a lot quicker than we think. We've got the symposium starting next week, and then I've read that the utilities get their budget allocations 1st of October. So we could start to see some long-term contracting happening within the next month or two, and hopefully that translates to the term price. But it's just, I know the markets are forward-looking, so I always take that into consideration. And I think it's only a matter of time before we start to make some moves. But look, I don't know any better than anyone else. It's all guesswork. But I definitely do try and make a bit of money from the volatility anyway. But yeah, all red here, guys, all red.
So what makes it a core holding for you versus something you trade? Do you look at the company?
I basically I did one big trade on Boss. I sold I've got 30,000 Boss, and I sold 10,000 at 250. So that was a big one for me. That was like 30% of my holdings. But all the other ones, like ELA 92E that I sold, and I sold just 1,000 Bannerman. It's just to make $200 or $300 here and there. So when I say core holdings, like the parcels are equivalent to 5 to 10% of the core holding of that company. So I'm too if that short doesn't work and I get left behind, then I'm not worried because I've got the rest there. But yeah, usually between 5 and 10%. But the Boss one I did was a big one, and that's so far that's looking okay. So, but I'll buy them back and make a bit of money on the arbitrage. But yeah, when I say short them, it's only 10% usually. But the Boss one was a bigger one for me.
Mm.
Yeah, and I had a sell-off on Vision. My position was huge. So I had really good prices, 50 cents, 24 cents, then 9 cents. But I sold the ones at 24 cents. So.
Yeah, well, good. Yeah, if you can make money on the arbitrage, it's a good thing, I think everyone gets disheartened when we see the rallies and then we see them drop again. And I just think you've got to take the opportunities sometimes. And listening to Liberty's been great. He's been a real solid guidepost for me over the last 3 or 4 months. So I'd really encourage people to listen to what he has to say. And look, you don't want to sort of put yourself in a position where you have to chase it. So just do it if you can, do it on a small percentage. But I said to Chapman on the weekend, this is my last short. I'm just going to, once I buy them back, that's it. I'm going to hold from here on. So I just think it's, in the next month or two, we could start to see some movement. But yeah, I've been wrong before.
Yeah, it's a big question. There is a lot of unknowns out there right now. Even my focus has really actually been on the Chinese inventory side of things. I haven't really been doing as much into the Japanese inventories as I would have liked. So that is sort of a question. Obviously, we did hear that Tim Gertzel, I don't know, Tim from Cameco, let's just go with that, was in Japan, was basically on the ground there, trying to see what they could do. I think Cameco is going to take advantage of this opportunity, of course. For me, I kind of had that bit of a obviously this space. The title of this space was meant to sort of basically declare my public position, mostly because I felt like I was going to be an asshole if I was coming on Sunday and saying, oh, by the way, guys, I sold everything. Good luck, everyone. So I
Hey, but that's
thought,
cool. That's what this trade is full of is assholes, right?
well, uranium assholes, yeah, and I kind of felt like, well, I mean, I sold a bit earlier on in the week. I mean, I was pretty much, I was all cash by Wednesday, because that was when I cleared out the ASX, and I just tell you what spooked me was the bond market, and I was looking at the 10-year Treasury yields. I mean, the Treasuries are at this point in time up from August 1st. They are up almost 21%. They might actually be 21% at this point. That is a huge rally in the 10-year yields. That just absolutely, I mean, that was a very, very bearish indication by the bond market. Now, I know it's like, okay, what the hell does the bond market have to do with uranium? Look, the bond market is, in my opinion, where money goes to maintain money. It's where wealth goes to maintain wealth. These people think they're smarter than everybody else because usually they are. And whatever is going on, whatever indicators they are seeing, has basically gotten them spooked as well. So we have seen these treasury yields go up, and I was just like, okay, And I had sort of a intuition feeling that Powell was going to come out on Friday. He was going to be much, much more hawkish. For whatever reasons, there's plenty of reasons as to why he might be more hawkish at this point. But to me, I just said, I know that we talk a lot in this trade and this about decoupling, and I think decoupling needs to be reframed in a different light. So, for instance, you might see, Cameco go up. Maybe Cameco is $40, $45, $50 a year or two from now. That doesn't mean that, in a general market sell-off that Cameco is not going to go down with the market. It doesn't mean that we don't trade down with the market. It means that, essentially as we go up, we may not, have outsized, down drops. We may not see the 10% drops in the future in a more essentially realized uranium bull market. So for me, I think the silver lining that I do want to leave everyone with was something from Liberty's video, which was that he pointed out, he may want to elaborate on this a bit more, is that with this jump up, we now have, with this 20% rise, we have a thereabouts across the market. I mean, it was, I think we were seeing a bit, seeing a bit more across as things were moving, because we've had kind of a pretty bullish indication, sort of a bullish run here since basically early July. This gives the uranium equities room to basically move down with the market, with the broader indexes, without basically having to the worry of basically pushing uranium through support, which could cause a broad sell-off, of course. So in other words, we may not see, let's say, Cameco may fall back down to like, $20. We may not, this jump up today or the last week, may have saved Cameco from, let's say, $16. I'm just using Cameco as an example, but you can basically apply this to across all the uranium equities. This is just, I'm just saying Cameco just for the sake of, simplicity. So we may not see Cameco at 16, but we might see Cameco test $20 again. I can tell you that personally, my buy price on Cameco is anything below $22.50. I bought it on Friday at $22.50, and that turned out to be a really nice swing trade for me. I would have liked to have held it on a bit longer, but for me, as you have to understand, from my perspective, my philosophy in investing is rooted in the fundamentals. And when I see basically everything, the thing when I saw, what was it, Anfield go up 27%, I was like, nope, I'm out. That's it. We're trading like meme stocks here. There's no reason for this. This is not It was the fact that it was just outside. It was the names that you would say are, not known to the broader market yet. And when I saw those going up, I was like, yeah, I think this is going to trade back down. And so far it has. This was just a pure intuition call. I didn't come out with it earlier, mostly because I didn't want people to basically trade on my intuition. I don't have that huge confidence in it, but I wanted to say something by Thursday, simply because I know there are some people that follow me. They do like my advice. Some of you may be here. And I thought that basically coming out with it on Thursday would give people the opportunity to sell on Friday. With apologies to the ASX folks, but then again, at that point, the ASX market had closed by that point. Or I may have said something by Thursday evening, so yeah, then the ASX would still been open throughout the overnight. So there you go. There's that. I forgot. I don't know the exact date I came out with that tweet, but there you go.
How have you changed on technical analysis? Are you kind of still interested in it, or you think it's something interesting, or you're still fundamental guy? And Liberty, jump in when you want to also.
Well, I mean, for me, what was nice this week was essentially having Liberty come in, doing the technical analysis. He can attest to the fact that I was just asking him over and over and over again to do technical analysis, please. Mostly because I, at the risk of, he was in a chat with me and sort of knew my feelings ahead of time, at the risk of potentially influencing his interpretation of things. For me, what I liked about the technical analysis this week was that it confirmed what my intuition was telling me, which was that, sometimes it's just, you're just sort of looking at it, and you're just saying to yourself, like, I don't like this. This is the time to basically, I think this is going to roll over. The other part of it that I saw more than one person basically say that they were finally in the green for once after what I can assume is dollar cost averaging from not selling the last time essentially they were in the green, and that could have been several months ago, it could have been last year. And to me, my worry was there as well, that if this went south, and I think this is still a potential hazard here, counterparty risk, folks, that if this turns over just a little bit, that you could have an event that perhaps the technicals may miss, and that is that you'll have a lot of people that are finally in the green may want to just sell now, and for the feeling of essentially being able to start over, and try again, basically, without essentially and freeing up basically a lot of dollar cost averaging capital that has been allocated to basically make their uranium investments break even or give them a 5-10% gain. So I think that's a real possibility, and I think it's something that for me, it's just kind of putting my mind in other people's heads a little bit, and thinking what I think they might do, and that's just one of them. It's not to say that I do want to say one thing real quickly, and that is that I know and I understand that in the sort of the broader trade, that the spaces are accused of being somewhat bearish. And I think this is true a little bit. But I want to be very, very clear that we are not unwelcoming of bullish interpretations. We don't bite. Please, if you are bullish on the trade, then absolutely, please say something. If you're short-term bullish, I mean, absolutely, please say something, because all points of view, all opinions all interpretations are absolutely welcome, because maybe you're going to be able to tell us something that the rest of us that might be a little bit more short-term bearish. I don't think anyone in here is long-term bearish on this. Otherwise, I don't know why you'd be here, because it's sort of like, it's just like, you want reinforcement of why you're not buying uranium. I get it, or ever. I don't know, but I just wanted to point that out and just address that. But yeah, with that, Liberty, if you've got something to say, or Alex, I yield the floor back to you.
Sure, I'll chime in. I think that was all very well said. I think, in fact, an opportunity is coming. You spoke of the bond market. The technicals are actually telling you that the bond market wants to catch a bid. So you got a lot of fear right there right now. I think a lot of people are about to get this wrong. All right, and so 20% downside in the uranium space is likely. I think we will come back down to those trends, but and we'll see what it looks like when we get there. Okay. But my suspicion is based on the confluence I'm seeing in commodities broadly, along with gold and silver especially, which is traded in tandem with uranium since April, which is part of what makes this kind of so easy to trade because you can find this broad confluence. I am seeing a setup for the next run. And, we'll see what it looks like when we get down there. But I dare say you might get a huge opportunity to go in big when we come back down to this trend. You named off the price targets. Those are very good price targets. We're looking at those same, 20, 50 kind of levels on Cameco. You can kind of use that for a reference for anything. And I think a lot of people are about to mess this up. You got to remember something. When that sell-off started in May, the reason why everything on your screen was red from sector to sector to sector is that it's a major risk-off event. People get liquidated. You get people caught with their pants down, and maybe they didn't want to sell uranium, but they had to because they were getting liquidated, right? Well, after you've already gone through that once, a lot of these bad apples are out of the cart. And uranium sketches me out a little bit compared to gold and silver because it's had these big run-ups like that. And so it's a little bit more iffy. But in the case of gold and silver, it's still at rock bottom. And because they've been trading in confluence, I'm confident to say that they're still going to run together. Okay, so I think that there's still some carryover in how this is going to work out. So yes, I think we have downside now, but I think we're going to come back to these same strong targets. You have to remember something. Uranium is in a bull trend. It has been for a long time. All you have to do is open the chart, and the trend is your friend. And the trend is reality until it changes. And that's just something you have to accept, no matter what your opinion is. Uranium is in a bull market. And these 50% swings is just part of the trade. It doesn't mean that it's suddenly turned bearish. The trend is up and it continues to move up, right? And you get these volatile moves, which, by the way, if you trade them, are extraordinarily profitable. These are powerful moves. So these are good opportunities to accumulate, right, along the way. And I think you're going to get that opportunity. We'll see what happens. I think we're going to come test these targets. I think that's the next place we're going to go. So just get ready for that, get mentally prepared for that so that when it happens, you're ready for it, right? You already are expecting this. We'll take a look at the charts at that time and we'll see what it looks like and see if we're kind of building the same kind of confluence of strength that we had built in the past. And if so, then we're going to go in hard because you have to remember on both the weekly and monthly chart, you're still showing this hidden bullish divergence on this bullish trend in uranium. Okay, so until that gets broken, it's telling you that another rebound's coming off of these strong trend lines. So right now, everything suggests that this is setting up for another buying opportunity. Just to reiterate, and again, the bond market on weekly timeframes looks like it wants to catch a bid. It looks like it's trying to bottom out. Even the 10-year is rolling over. So I think a lot of people are actually about to screw this up, honestly. I think the key right now is to be patient. I think you should expect the downside in the near term. But you mentioned who's bullish. I'm bullish. I'm very bullish. And until the bull trend changes, until these technicals get broken, you're just going to get another opportunity here in the near future.
I completely agree with everything you just said. I think.
Hey, Chapman,
Yeah, please go ahead.
do you feel a little bit naked, like having done what you've done, or you're quite comfortable at the moment, or?
I mean, seeing, that I think The it was the one thing that I have not sold for months is Silex, and that one was always been a bit of my safety blanket. I never wanted to get rid of that one, but frankly, I got it and I sold it for a really good price, an excellent profit. And as it comes down, as it looks like it's coming down a bit today, that to me is it's just an accumulation opportunity. I mean, I felt, I think I would feel a bit more naked the um, if what I thought was going to happen didn't happen. I mean, I'll be honest, I didn't quite go all cash because I bought SQQ, S triple Q, and SPXU, and basically swung trade that on Friday for a 8% gain. I mean, I was okay. I'll take that all day, every day. Um, that was a bit of a risk, and that was it was thankful for a part of the things that I was learning from, I would say, Liberty, which was also just a bit more of a technical. I guess you could say this was a bit of a technical analysis thing. But when he pointed out to me, like, I had this question, like, because I don't really trade options, it's not really my thing. But I had a question recently about, well, both the puts and the calls are going down. Well, what does that say? It says to me and I was replies that the market is indecisive. They're not sure what to do, and that was the signal to me to go all in on the short, because if the market was, uh, I thought, to me, if the market was decisive, it would be a bullish day. If it was indecisive, it was people coming around to basically, selling for the day, and that turned out to be really good. Um, I feel a bit of the freedom now to allocate capital more fully to the things that I want to buy. I have a long list of things I'm ready to buy. Um, I'm just waiting for my price targets to be reached. So, Energy, you've got your hand up. Please go ahead.
Go ahead. Yeah, energy.
Yeah, guys, thanks. Thanks again for hosting the space. I always love it when I can jump on, and thankfully, the littlest burrito went down quickly this evening, so I could make it on. But yeah, I'll just tell you, um, maybe sort of the flip side of the same coin that Chapman and Liberty were talking about is like the way that I play these trades the same way as I did with oil is I'll have to admit I don't think I'm clever enough to stick handle buys and sells throughout the trade. And it's wonderful for the people that have that skill, but for the people that are on the call going like, well, I don't know, like should I move into cash or should I do this or that? Stick to your gut or whatever. But I would say the consensus on this call is long term bull. And if you don't need the capital that's in your portfolio to keep the lights on, which nuclear will assist in, but um, I think likely sitting on your hands is going to be the clever thing to do over time. Maybe you take a percentage and go, this is my trading part of the portfolio, 10%, 20%, whatever it is, and go, that's my stick handling, but the rest is just pure conviction, whether you're on or off the trade. And then I'll just again explain to, I think lots of people have already heard the way that I do it, but basically I start buying into this space, especially if the cost of production is higher than the spot price of whatever the commodity is. So in oil, when it was negative, that was a pretty obvious entry. In uranium, I think there's still a pretty healthy argument that we're beneath the sort of marginal cost of production for any new production to come online anytime soon. So I rest easy with that. And if it takes a year or it takes 2 years, which I don't think it will, but I mean, if it did, I don't care. Eventually, the rubber's going to meet the road, and we're going to see the crescendo that we've all been waiting for. So just to kind of conclude the thought, when I get onto a trade, I scale in. I start with 5% or whatever, 2.5, and I scale in and I scale in and I scale in, and I never ever stop scaling in until until I think I've made sort of the trade, and then I start scaling out. And so that's how I got into the uranium trade. Is I was 100% oil, and then I got 2.5% in uranium, and thanks to the market that grew, and also scaling more in that grew, and now I'm pretty much 50-50, or in my levered out scenario 60-60 oil and uranium. So anyway, that's a really long sort of explanation. But for those that are on the call that are just kind of sitting tight, so am I. And I just I wish I had the crystal ball to be able to move. And yeah, my gut did say when I saw that pop, maybe you could shave some off. But I was like, whatever. This isn't the top, so I'll just leave it.
Yeah, for sure, and it could take a few years. So I've held them for a few years. We'll get to Zed and Bitcoin in just a second, but I guess I want to ask Energy. So do you trade based on holding things for longer than a year for based on taxes or not?
I don't really. Uh, from a if the question is around tax implications, that would be sort of like maybe the third or fourth thing I consider on the trade. But I do as much as I can. I live in Canada most of the year, and because of that, we have tax free savings accounts and registered accounts and that kind of stuff. So I'm able to hide a bit that way. I also have a spouse with which I can split and that kind of stuff. So I do think about it. I think when I'm going to do the trade anyway. Um, but in terms of the long term, where I think this thing's going, I think whatever jurisdiction you're in, the tax man is going to be very happy with your portfolio at some point. But anyway, yeah, I would just say when I'm looking at the trade, the first thing I'm looking for is a disconnect from what I believe is fair value. And in commodities, like I said earlier, if you can find any commodity on the planet that's trading beneath the cost of pulling it out of the ground, that's the easiest trade in the world. And then I don't think you scale out at all until you until you hit that marginal cost. And Chapman can talk this, you guys can talk about this, but it's got to be near $90 now. Like in the oil and gas space.
That's really high, 90.
Yeah, I think, yeah, in order to get like what we're seeing in the oil and gas space, and just wait for the next quarter to come out for the guys that are like, let's wait for Cameco's next quarter to come out. I would not be surprised if the cost of pulling it out of the ground has gone up for them, and they're a very low cost producer. um, in the oil and gas space, we've seen like a 40% increase in a lot of places, in terms of pulling it out of the ground. It depends the way that you're pulling it out of the ground, whether it's, there's multiple ways of doing it in oil and gas, and it's the same thing with uranium. But it's this weird bottleneck that people maybe haven't fully considered is there's just not enough people to get out there. And I would be really interested to hear how Cameco is doing that and encouraging whatever, like 2,000 guys and gals to go up into the middle of nowhere and look for uranium. It'll be interesting to see how easy that is for them. And if it's not easy for them, it's going to be incredibly difficult for um, spaces that haven't even, or maybe haven't come back from care and maintenance.
Hey, can you guys hear me?
Yes.
Yes, we
Can you
can.
get? Okay, great. Hey, thanks for making these, having these spaces, and I see that looks like it's moving to Tuesday night, so I'll be there. Question on enrichers. Sorry, I just got on, so if this has already been asked, but I've got Centrus. I own Centrus and Silex, and I know that Camco has a position in Silex. Any other enrichers that I could that is publicly traded, or what do you think about those two, Silex and Centrus?
Well, everybody knows my position on Silex is pretty bullish. Um, there's a certain provision in the law concerning halio There's also a new bill that's in Congress right now that the just to give you a brief gist of that is basically that Congress is tired of DOE dawdling. I mean, it's actually a really beautiful thing. Just basically, I love it. I love it when Congress just tells bureaucrats to do their damn job and do as directed and stop. We have the power here, you don't. And it's so just. I'm sorry, I love that one. Mostly because I'm just a big fan of Congress. When they actually decide to use congressional power, which they usually don't. But anyway, I think that all the two publicly traded options is the ones you listed, is basically Centrist and Silex. I am might surprise some people to hear this, but I am somewhat bullish on LEU. I think my entry point, this is not a time to buy that stock at all. Just because there's just too many unknowns there. But if you really wanted to allocate a lot to enrichment, I think you would be justified in having a small position in Centrist. So that is mostly because they will probably get something from the pie. How much they actually end up, being, I don't know. But essentially, in terms of the big winners in the enrichment space, it's going to be Urenco, which is not publicly traded, unfortunately. They thought about going public. Maybe they'll go public in the future. The Germans kind of vetoed that idea. I think it depends if they really have to raise capital and the bond market is not cooperating with them. They may have to go public. We'll see. But beyond that, we have actually gotten some updated figures from Silex in terms of plans and timelines. We know that the lasers are going to be delivered from Australia to the United States at the Wilmington facility next year. From that point, they will begin to do a commercial scale test. They have scheduled that to begin in 2024, but I imagine that could probably go quicker. They seem to be essentially speeding up the time scale every time they end up opening up their mouth. So I think they have the opportunity, and they crucially have something that, in my opinion, Centrist does not, which is something that they can actually sell to the public. What do I mean by that? Well, Centrist does not actually own anything. you can verify that for yourself by just going and taking a look at their balance sheet. They've just built this very large. Well, it's not large, but it's many millions of dollars, or probably over $100 million in assets here, in an asset here in this little HALEU cascade. You will find that it is not on their books. Why? Because they don't own it. They don't own anything. They don't own that cascade. They don't own the designs to that cascade. They get a small royalty if they are the people that do not end up operating that cascade or operating those centrifuges, and DOE commercializes the technology. But beyond that, they don't own anything. So it's really not their decision to, this is why they haven't put out an investor presentation showing, oh yeah, look at our centrifuges, just give us some money and we can build these things. That's why they haven't been talking to utilities. Now, are they going to get something? Yes, I think they will. I don't know what they're going to get yet, though. So, but yes, I think enrichers you will find are going to be very, very profitable. I don't think Silex is. Some people have said Silex is going to be $100 stock in a couple of years. Okay, I'm not quite sure about that one, but I'll be really happy if that one gets to 20. So, Energy Burrito, you got your hands up.
Hey, thanks again. Just thinking about the following sort of weeks and months and maybe even quarters on the trade, but maybe I'll go back to more really short term. Is I'm starting to think about the sort of the buying cycle for the utilities, and it seems like the season is sort of October on. Maybe some people may front run that. I'm not quite sure, but I was interested in what you're thinking about that, and in sort of concert with um, the potential of a repeat sort of spook into seeing utilities purchasing a little bit more than they're used to, just by virtue of Japan talking about restarts, and other places talking about restarts, and other energy sources around the planet becoming obviously scarce. Look to Europe, for example, and you'd have to think. I've had my experience, but other people have said that there are very clever people that are involved in the purchasing of uranium for these utilities. And the thought that I had was, is there a scenario that we see over the next sort of 3 months where I guess we're all looking forward to, is where we see maybe a much more aggressive season for purchasing pounds. I don't know if you've heard anything about that. And then just on top of all that, you guys were just talking about enrichment. Um, they must be thinking about they must be thinking about securing these pounds. I mean, if they're not at this point, I don't know what spooks them into the market. But Chapman, I know you have your boots on the ground, and just thinking about that. And last thing I'll sort of dovetail into all of this is, when you're doing the back of the envelope, and I know you actually, maybe that's a little bit low to say, when you go granular on your thoughts in terms of what the feeding cycle means, going from underfeeding to overfeeding, and what that means, because at the end of the day, this is where this trade goes, is that there isn't enough physical for the commodity itself, and that's where you could see a squeeze. So I know that was a lot to bake in there, but to summarize, it's effectively, do you think this purchasing cycle might be a little bit more aggressive? And do you think that there is a scenario where there's real fear put into these buyers because of the actual the actual scarcity of the of U3O8 and on?
Personally, I actually am not putting a lot on the idea that this is going to be a major buying cycle. Like that this year is, you're going to see. I mean, you're going to see something, yes. Um, I think that is just the beginning. I think you might see, honestly, you might see $70, but even then, I think 65 would be something. And just as being a bit more risk averse, and not wanting to, put too many chickens before they've hatched out of their eggs. Um, the what will happen? What's going to be this cycle's Cigar Lake flooding is going to be a utility basically announcing that they don't know where they're going to get fuel from. And that actually, I think, that will not happen necessarily this year, might happen next year. Um, there are too many unknowns around enrichment at this time, for essentially, I think, there to be major buying, essentially in the kind of level of buying that's going to be required to essentially uh, you're going to see utilities dip into inventories, um, and yeah, they're going to buy some enrichment to get to some level of EUP without going absolutely crazy. But I think, honestly, it feels like we are sort of sleepwalking into a disaster here. Now, that's actually not a bad thing from a bull or bear perspective. I mean, it's actually quite bullish. Just because I think the problem that we have going on right now is an issue of, if whoever knows it's a problem, they're sort of, their response, well, it's not my responsibility, or someone else is doing something about it, or something along those lines. I think you will sort of find that this is gonna get, this is not, in my opinion, it's not being taken as seriously as as I think it is. I think it's, based on some conversations that I have with people within the industry itself, it seems to be falling a bit on deaf ears. Now, that's either making me wonder whether my numbers are right, bearing in mind that my numbers were actually far more conservative than I think most everyone else's were in terms of what actual demand was. And I'm essentially saying, now that, oh, by the way, you're going to have twice as much uranium. You're going to mine twice as much uranium, essentially. That's where it's going. So, in terms of seeing like major price action, I don't think it's going to happen just because it's not going to. We're not going to see $90 U this year, simply because it just hasn't dawned on everyone just yet. As to just, as to just exactly what losing, what the DOE says is 20% of capacity, what Cameco says is 40% of capacity, and what I and someone else on Twitter named Clay say is probably closer to like 50 to 60% of capacity. There just isn't this realization to it yet. Now, that might change with the fuel market conference that's coming up. Maybe there's some come to Jesus moments there. But again, it's just, I think we're going to see some more of like just not my responsibility. So, and it's just going to be, nothing is ever fixed until it's a crisis. And this is no different. So, I think you're just going to have to wait for the crisis on this one.
Yeah, thanks, man.
That sounds great. I mean, like they say crisis and opportunity are the same.
Oh, it's huge.
Symbol,
it's huge.
But the same symbol in like Chinese literature.
Yeah.
But I see we have Uranium Insider, Jabroni. If any of you guys want to come up and talk, or if you just want to listen, that's fine too. But jump in if you feel like it.
But we also have Elney.
Batman,
Let's get a question
I
from
have
Elney.
a comment
So yeah, let's
on
go.
the same subject, but Zed had his hand up before me. Zed, are you on the same subject, sort of inventories and potential crisis here, or are you looking?
No, you go right ahead, sir. Go right ahead. I'll be distraction. Go ahead.
All right, I sort of have a potential, markets translation catalyst here for you guys that kind of dovetails with what Energy Burrito was talking about. Maybe he might want to weigh in on this too. What we're seeing in oil right now is Saudi Arabia is loudly calling out the discrepancy between oil prices and oil inventories, as well as the supply and demand situation and just the general physical tightness of the markets. And they're basically calling BS on pricing in oil. They probably think it should be above $100 a barrel right now. And what they're doing is they're saying, okay, we're going to cut production if we're at 90 because we need some spare capacity. At the same time that they were doing this, the Secretary of Energy, Jennifer Granholm, was sending out a private letter to refineries, which got tweeted out by Bloomberg, Javier Blas. I retweeted it. She was telling refiners that you guys need to stop exporting refined products. And if you don't stop exporting refined products, we're going to invoke various emergency measures because we want to keep the price of refined products here in the United States low ahead of election season. So you're seeing all these desperate machinations basically by politicians and consumers and everything else to deal with these low inventories and to keep prices low. And the catalyst here might be that the oil market might say, you know what, because this event happened in the Northeast where we ran out of heating oil or some other similar catalyst, we ran out of heating oil, we ran out of jet fuel in Pad 1A at a couple of airports and shut down air travel. We're willing to pay a premium just to have the physical supply be there. It's worth it to have physical supply. We'll pay for the reliability. And if you were to see that happen in the oil market or in the natural gas markets, it would probably create a translation effect over to the rest of energy, including uranium. And I have a feeling that utilities would find low uranium inventories to be very unacceptable, and that would probably, cause an increase in the price. But you need a few more things to happen first. But it's an interesting space to watch.
Yeah, I love the parallel because like you think of, I'm obviously in the oil space, but when you think of the sort of similar language coming out of the uranium space, you've got the CEO of Cameco saying this is the best setup he's seen in 40 years, and that's every other cycle that we're talking about. And people that like or dislike or listen to Rick Rule, he was on just very recently publicly saying that it's back on, and he's deploying capital into the space, and he's not afraid to say when he's selling too. So it's interesting that the people you would think have a good sense of understanding what's going on in the market are kind of scratching their heads going, we think this is the best setup in history and we don't know why it's not doing anything. See, it's the exact same thing as what you're saying with oil, where Saudi Arabia fully understands what's happening in the world, and the paper market's just pushing it around. And the physical market is everyone knows what's happening in the physical market. Like Europe, people in Europe are going to freeze. That's how bad the physical market is. And yeah, I really like that parallel. So maybe that's what it is. And maybe Chapman's right. There's going to be this sort of coming to God moment where the fuel buyers look around, and all of a sudden there's the music stops and one chair is missing and that guy falls on the ground. I don't know.
Well, just remember that Cameco has been basically in the last conference call. You can read between the lines here, and that they were sending a very strong signal to utilities, like, "Hey, start getting serious." Cameco knows what's up, of course. The reason that I'm saying that, it seems like to be that the utilities are basically not taking this seriously. You just remember that there's quite a few utilities that may only have a couple of reactors. And they are, sort of playing this by ear because, again, they may not necessarily have a fuel buyer. Like you said, Energy Burrito, they might have some fairly savvy people that they hire for them. But, I think what the real catalyst for all this is going to be is that one day you're going to have a reactor manager call up their fuel buyer, and the fuel buyer is going to say, well, this is what the price is. And the manager is going to be like, what? And it's going to be sort of a real moment where everyone starts panicking all at once. And I think the real catalyst, like I said, is going to be that you're going to have somebody. You have to remember, a lot of the larger players, they have inventory. They have inventory for quite some time. It's going to be the smaller players that could be potentially the catalyst that you'll see. Like you're going to see maybe let's say a Excel Energy or something like that, or perhaps even who are the people in Arizona? I forgot off the top of my head. The Southwest
Palo Verde, right?
Palo Verde, yeah, and it's the utility that operates it is the something project. I don't know, Salt Creek project or something like that. I'm not sure. But you're going to find someone that's just going to say, like, we don't have fuel. So, and I think that's you have to remember, like, everyone needs to remember that this is a trade in the equities that runs very volatile, very hot, very fast for a market that operates at basically a glacial pace. I mean, nothing is ever.
I think one of the other things that's been difficult just in the last little bit, like the last, maybe a couple of months, is just without Spot kind of giving us a sense of what the pulse is like on a daily basis, I feel like that's my compass is a little bit off. You know what I mean? I feel like I don't have that daily kind of reminder of, okay, this is what's going on. These are pounds that were purchased today. This is what the price was. I think that if it could turn back on for any length of time, it would give the market a real sense of how tight that near term supply is. And we can see out in other spaces of the fuel cycle where the prices are going up dramatically, right? And so it'd be interesting to see, because my sense is, and this is just from stealing ideas from everyone else, that those pounds at the front end are becoming very scarce from what I understand, from what I've been hearing from people. But we're not really going to know until, I guess the fuel buyers start purchasing, or if Sput gets turned back on. And we're just, we're in that space again. Like if we get a couple of positive days this week, Sput will be back gobbling again, right? So yeah, that'd be great.
So I think I can hopefully say a little bit of insight on the without revealing names, of course, because this information was given to me in confidence. But I can say that you'll have let's say a near-term producer that has been in contact with utilities. So they are talking to utilities. But the sense that I was given is that there wasn't a great urgency, essentially. Take that as you will. This is just one anecdotal example, of course. But there is, I think, there is an insight to be gained there. So take that as you will. But Zed, you had a question a long time ago. Let's circle back around to you.
Yeah, I appreciate you answering the enricher question. And Chapman, I did drop that in your. I sent you a DM. It's the actual letter from Granholm about she's basically threatening them. So you could drop that in the nest if you want to. And I'll say that if you guys didn't see, Dr. Huff was in front of Congress, and she tried to make that message clear, by the way, about hurrying up and the urgency. And it's on YouTube. It's worth watching if you guys can. So I have a question about a couple of different companies, and I don't want to distract from the flow of the conversation, so I can just wait to ask about a couple of companies.
No, that's fine. Just go for it.
Please go right ahead.
All right,
we can stop talking about how the world is ending anytime and get back to this.
So and you could rapid fire these guys. I have I listened to you very carefully, Chapman, and I've heard you say a couple of things like 25 to 40% in Cameco. I absorbed that well, loud and clear, and I have all the usual suspects, sort of the larger market caps. But Anfield and Elevate, you could just rapid fire those if you don't mind.
Elevate's interesting. I would still like for them. I mean, they're drilling actively, so I will always say, the key thing for an explorer for me is I have to know that they have a drill program operating at the moment. And I do believe that Elevate is still continuing on that path. Elevate is a geologist. They're not really miners, though. So that's an important thing to realize. So that's how you would frame an investment in Elevate a bit differently than you would say a Paladin, of course. Elevate may not be something, you might hold long term unless they get something real. Was Anfield the other one, by the way?
Yes.
So Anfield, oh man, look, they had the mill that operated for a couple months, and then they have a couple different little teeny tiny deposits. I don't know. Does anybody else have something to say about them?
You could also say not for me. So
not for me. Yeah, I would say yeah. Let's go with Thank you.
Perfect.
Thank you, Alex. Thank you, Alex, for shelving me out here.
Thank you all, and you guys can drop me down to listener. Thank you. And Justin's on here. Justin, thank you so much for all that you do for us.
Absolutely, yeah. Justin if you want to come up, say what's up, see what's going on, more than welcome. So. What was I gonna say? There's something else I was thinking about. It's on the tip of my tongue. Never mind. Anyway, Ironwing, you got your hand up. Let's go.
Just a quick comment. Just talking about that near-term producer, not in a rush. Just clarification on that, Chappie. Was that the producer not in a rush to sign their contracts, or the utilities discussing it with the producer not in a rush?
It seemed to be both, actually, from what I would see there. And I think you have to realize that right now, you could have potentially both parties that are not in a rush there, because you have a lot of mines, a lot of producers now that they do not want to repeat the same mistakes of the bull market. I actually had a very we can talk about this a bit more in a second, but I had a very nice conversation with Mr. Chalmers on Friday. It actually went really well. He invited me to go see the mill if I'm ever out in Denver. You know, he charters King Air. He said, "Hey, come on, let's go see the mill, go see the sites." I've not. I will say to everyone here present, I have not changed my tune on Energy Fuels, but I'm keeping an eye on them, and I'm always keeping an eye on them. But it was a very, very pleasant conversation with Mr. Chalmers, and he was able to really actually be a source for my own edification. He taught me informed me of quite a few things that I did not know about, just in mining in general, as well as some things that Energy Fuels is doing. Energy Fuels isn't quite a stock that I could recommend just yet, just because I don't really recommend things that I don't know what the cash flows are going to be on them. If you want technical advice, there's plenty of people that can give you that. But that's never really been my shindig so far anyway. So the hope is that we will have Mr. Chalmers on here fairly soon. I think I'm going to send him an email, and I'm going to try to get him on for our debut Tuesday space. We'll see. But we did agree, he would come on this space, and and I would, if I was out in Denver, we'd go see the mill. So
just
nice.
a couple of things to follow up. Firstly, with the contracting and not in a rush, I think the most interesting, near-term developer to look at is Boss, and the way they sign contracts.
Yes.
You go back and listen to Duncan, how much he understands the contracting process and wanting to, increase shareholder value. And he's a massive bull on uranium in general. Yeah. So, when you have someone like that that's knowledgeable and a bull, it's going to be really interesting because they've, capital raised. They don't need to go to the banks and sign contracts early. They can sign it whenever the fuck they feel like, to be honest. While everyone else, someone like Lotus, I believe, are looking to sign. They're sussing out contracts to then be able to go to a bank and a loan to fund their mine. So I don't know. Personally, I think that looking at Boss and when they start contracting is really going to be a big sign for the total market. And then follow up with Chalmers, just ask him all about the rare earths.
I've asked him about I did ask him about the rare earths, and they'll have information to release when they're ready to release it. So
fair.
I don't know anything more than that. Obviously, he's not going to tell me anything that he can't release to the public just yet, because I'm just a glorified person from the public. But what I did learn from Chalmers was just a lot about even just contracting in general, like how Paladin basically didn't lock in higher longer term contracts, and then the market fell out from under them, and that's really what ended up hurting them. I mean, there's a lot of stuff about Paladin that I learned from him that I didn't know, like particularly about Mount Isina, and there's just how that was never quite maybe as good as it was supposed to be. I mean, there's just some other things there that was that was very interesting. He's a very, very very frank person, but he's I think he wants to produce uranium. That's the sense that I got from him, that he's been a uranium miner all his life, and the rare earths thing might, as I've said in the past, might be more money for them, but they are going to produce uranium just because that's what he does, and that's what he was hired, I'm sure, to do. So but yeah, hopefully we'll get him on here, and he'll be able to, I think, fill in some more gaps here as far as how they are approaching the contracting cycle. I think that would be actually a great, some great insights there. So, Ilani, you've got your hand up. What's up?
Hey, Chapman. While we're on the micro subject, if you, I'm looking for ideas right now for a relatively high torque to dollar investment.
Sure.
Producer, with active production out there. Where would you kind of be looking for that? Would it be like a Peninsula or Bannerman, or do you have any other thoughts, on a company that would have a lot of torque to higher uranium prices with an active mine that's operating?
Okay. Okay. Let me get my chart up here. Because there's
I
a
don't
couple.
think it exists.
I mean, as far as like high torque, in terms of who's going to be in production soon. Is that what you're saying, Iron Wing?
I'm looking for I'm looking actually for high. Normally in the oil and the gas space, the higher cost producers tend to trade at lower valuations, per MCF or per BOE produced. So normally, what you'd be looking at, is you'd be looking at a relatively higher cost producer, that has a lot of either uranium in reserves, or that has a lot of uranium that's actively being produced, maybe with a relatively tight margin right now, but it could expand, if uranium prices go up by $10 a pound.
So there's some things that depend on that. Like if it's an in situ producer, the easiest thing, if they've got the chemistry down in the area, the easiest thing for an in situ producer to do, particularly if you're in Australia, is just sink some more well fields. And because they don't have the environmental considerations to do with like the groundwater, this is something I point out to people, more often than I think it needs to be pointed out more, is that if you're an in situ producer in, say, even Canada, actually, I mean, even though up there, let's assume Denison gets in situ working, they still have the environmental regulations, and you don't necessarily have that in Australia in terms of groundwater remediation that you do in, say, Texas or even Wyoming, especially Texas. In terms of like high torque near term producers, I was really hopeful with Peninsula. They ended up kind of being a little bit disappointing in that, maybe that one could expand out again. But man, I was really disappointed in that. And that was mostly just based on the fact that they had went to their alternative plan that they had come out with in terms of their new, in situ recovery plan, whatever. I forgot what they called that. But it was 2018 or 2019 they came out with that, and there was an alternative plan for that basically involved half production. Because the most thing that is really clear for the biggest, most important thing for uranium producers, particularly the smaller caps, is just producing every single pound that they possibly can. Even if you have a slightly higher cost, because every single pound, once you basically get to a certain point, every single pound basically just becomes profit. It can be huge, like $5 or $10 in for something like, say, a URG is huge. I mean, that's a huge valuation difference for them. Global Atomic still has a lot of torque left, in my opinion. I think they've got a lot of room to go, and they are still somewhat undervalued by the market. So I mean, I think, man, if depending on what they're going to do with their updated resource, and a lot of people need to also remember that Roman has said that they are coming out with a higher production target for phase 1. So that's even better news to my ears. Now, the big question for Global is going to be, how much is the mine going to cost? They think they can do it for like $330 million, and I'm like, well, okay, we'll see about that. But even then, I mean, that mine cost could double, and it wouldn't really change my investment thesis on them that much. It's looking that good. So, there's that one. And then there's also Boss. I mean, Boss is sort of they have potential. It really sucks they're not 4 Mile or 4 Mile Beverly, which is just a deposit that's, absolutely amazing. That's just to the north of them. But, we'll see what they can do with that. Also, don't forget about Kraken. That's a total joke. But yes, Jesus, I'm sorry. Anyway, in terms of of that, I think the other one would really be if you want something closer to home, URG is actually still they're not bad. I think they if they can get a good high price and are able to get what is it? Surely something in production. Um, they would be a real company at that point. I mean, not that they aren't now, but there's a lot there. I mean, I'd say your biggest torque at this point in resources is probably global. But anyway, Iron Wing, what's up?
Just a quick one for you. What do you deem as the three most highly levered against the uranium price mines in the world that you know of?
Like, that's probably going to
like high cost producers.
Oh, high cost producers that are going to need like the higher price of uranium. Okay.
Yeah, you're going to need. Which ones are the most profitable companies? Let's say if uranium gets to $120.
If they're so they're the most profitable now, or they're the most profitable. Period.
Potentially near term developers. No complete,
not Cameco.
Bullshit 2030. Yeah.
Not Cameco. Okay. I wish I knew this off the top of my head, and I could tell this to you pretty quickly. Let me get back to you. I have a couple things I could put in I have a couple numbers I could run, but first indications would probably be. Man, global just takes off like a rocket if they can get
correct. From my back in the napkin, it's generally global, Bannerman, and the old Melgarockle, the old Vimy. But I haven't run the numbers with DYL, as well. But those are the three I know of, and also ACB. Again, I don't know why it's ignored, but down in Botswana, a lot of pounds. Lots of pounds and high cost production. So
Patrick likes them.
Yeah.
Oh, I know he does. He got me onto him.
Lotus. They here's the thing about Lotus as well. Lotus is maybe going to have, let's just say, half the production of a Paladin, but right now they are 1/5 the cost. In terms of the market cap and the share that you're buying there. So yeah, they're both going to cost $80 million, let's say, to get the mines back up and running there. But I think there could be the potential for some bit of room there for Lotus, depending on the kind of pricing that they get. So there's another one there as well.
Well, I remember seeing an interview with the CEO of Lotus a couple of years ago, and he clearly stated that we're going to lock in contracts to fund the mine. That's our initial plan. No matter what the contracts are, as long as they can fund it, then any excess we'll look for higher prices. So I have a suspicion that they'll be locking in contracts to fund their mine basically.
Yeah. Okay. Let's see here.
Sorry, I didn't catch that, mate. Look, just to go back to ELA, Elevate, I think is really good potential and a potential buyout. Who's going to buy them out is a very good question. I don't know. There's a number of people that could look to pick up that project. I know you were pretty pro Deep Yellow purchasing lot potentially. Well, I think that was you. It might have been someone else. Just to fund their other mines.
Deep Yellow is an interesting one in that, I don't know if you noticed on Friday, but it held up a bit stronger than everybody else did. And actually, even today, it's holding up pretty strong. Now, I don't know if this is just, because we're sort of in the explore developer stage of the curves. What the hell is that guy's name? L something. Lasange curves. But that's an interesting one. I don't know. It's who knows? It's something I was thinking of real quick, but yeah.
Well, I think Deep Yellow, is starting to get recognised for the what is it, 9 million pounds they want to produce yearly, with their 2 mines.
Oh boy. Yeah,
So
I know.
if they're getting
They
up
can
there
get
in
it.
pounds, to big boys, you know what I mean. So if they start getting another 1 or 2 projects under their belt, they get the 10 million plus per year. It's a big company. It's not like most other near-term producers that plan to produce maybe 1 to 3 million. So interesting company, but it will be interesting to see what happens with Elevate as well. It's near them, similar sort of deposit. So I think that's got big upside as well. Anyway.
Oh, come on. Where did I put this damn thing?
Yeah, I like Deep Yellow. So Patrick, I kind of invited you up. 92 had some good drill results. So I don't know if you want to talk about that or anything else.
Sell me on the IPO, Pat. What is it? TerraPower? They're also in Athabasca.
Wait, TerraPower? Is that the? I thought that was the.
I forget their name.
Are they doing an IPO?
He posted it. There's an IPO on the ASX for an Athabasca Explorer. I forget that it's Terra something.
Okay. Huh.
As luck would have it, we have the folks from Azarius Capital just joined us. Maybe they can speak to it.
Jump on in.
Well, if you guys don't mind, I'm going to take a second here to throw out a public service announcement. If the folks end up joining, I'll just go back on mute here. But I just want to give a little reminder to the folks here why we got into the uranium trade. I know there's a lot of worry what's going on at the macro level, and people have been calling for a crash for, I guess, going on a year now, so maybe more. And the bulls have been calling for a Fed pivot for, I guess, the day after the Fed increased their first rate. So all this to say, I think what's going to happen at the macro level is going to happen. But don't forget why you got into uranium in the first place, the torque, the gains, the returns that we could potentially make here in uranium, and that those 20-25% pullbacks, I think we're all used to them by now. And for those that are listening live and those that are listening to recording, I should remind folks, I guess, my story that I shared a few times here. I sat on the sidelines throughout all of July and August of last year, and I missed that massive leg up. And then I ended up chasing all the way down, and then I had to cost average my way all the way back down just to finally get back into the green, which was kind of a bummer. I'm not a TA guy, so I'm sure there's some folks on this call kind of cringing, saying, I don't know what I'm talking about, but I got into this uranium trade again for something special, and I don't want to be caught without my seat at the table. And I keep reminding folks about that if you got into uranium and you're worried about a potential another pullback, okay. And I know about the folks that share a stock that goes down 90% could crash another 90%. And, I know all those stories, but I think I'm in here for something a little bit more special. So I hope a lot of folks don't get shaken out of this trade, don't get worried out of the trade. If you're in here and you're worried about where your next dollar is going to come from to feed your next meal, then maybe you shouldn't be in the trade. That's a different discussion. But if you got in here for that special torque to make something special and a possible, another 15, 20, 25% pullback is going to shake you out of the trade, okay. And I know it sounds foolish saying that because money is money, and who wouldn't want to jump out if they can make that 25 points? And I get all those folks over there, but I just keep reminding myself how I felt, that emotional feeling, that in the pit of my stomach, in I think it was Labor Day weekend, so right around the corner of last year, when I saw these stocks take off and I was sitting on the sidelines. I had my portfolio built out, ready to buy, and I didn't pull the trigger yet. And I just watched the stocks go, and I kept telling myself, I'll just wait for them to pull back. And they just didn't pull back, and I missed that whole leg. And then I finally did what human emotions do. I just chased in, and I was stuck just cost averaging down this entire time. So anybody who's listening to this recording, thinking about getting into uranium, remind yourself why you're getting into uranium. This isn't a 8% portfolio gain annual kind of return thing here. You're looking for something special. So if a 10, 20% pullback is going to shake you out, think about it before you jump in. So that's all I want to share about that.
For sure. So you're still in Fission 3.0?
Oh yeah, I haven't sold out of any of my positions. There was some trades I made towards the tail end over here that just were really nice, so I took some profits. But I didn't take myself out of the positions. I just did some crazy stuff with SMR warrants, and I just jumped in really, really heavily, and I bought a massive position when it pulled back a ridiculous amount. And yeah, I made a good 35-40% return on those. So I still have my full core position. Actually, I'm inflated because I didn't sell out everything I did buy. I just kept a little extra, but I made a crap load of money on that, and I was really happy about it. And I don't normally trade. The only reason I did that is I started, thanks to Liberty, some of the channel, follow your tops and bottoms, how things go. And I just think, you know what, I'll take a chance. This thing, it pulled back way too fast, way too quickly, and I just jumped in. I bought a big amount, and it paid off. I'm not generally that kind of guy that does that kind of stuff. I just buy my positions and hold. And yeah, I've held everything. I haven't sold anything yet. Could have come back to burn me. Yeah, I'm not going to admit. I'm not going to stand here and pretend I'm an expert trader or an expert market person who understands what I'm doing. I just recognize the opportunity that's presented to me in the uranium, and I'm going to stick to it. And if it pays out, it pays out. If it doesn't, I get it. But I feel pretty good about it. And again, I think it's a question of time at this point. And maybe throughout that timeline, whether it's weeks, months, or a year, there'll be one pullback, two pullbacks, a dozen pullbacks, who knows? But at a certain point, it's going to go. When it goes, I got a beautiful, beautiful position. I built myself a beautiful portfolio. And you know what? If it pulls back, I'll just pick up some more. I mean, I'm blessed in that situation. So I know that's different for a lot of folks, but I had that luxury. But right now, yeah, I just don't see myself getting shaken out of this trade. I mean, I forgot who it was that said this. It was somebody who tweeted a little while ago. We had 2 reactor scares in Ukraine, and it didn't break this trade. We had everything going on at the macro level. It didn't break this trade. I mean, he just listed out a bunch of stuff on Twitter and said, if you're not out at this point, are you seriously going to get shaken out this week because the Fed came out and had some more bearish tone or some money flowed into the bond market? It's nothing we haven't seen over the last year. Could it give us a bit of a bump right now or a bump down right now? Yeah. But to what extent? If it bumps you down 10, 15 points right now, but then somehow in the next couple of weeks, spot is back in the market and the flywheel kicks off, or some contracts are announced that people panic. And what Chapman was speaking about a moment ago, what if we take a quick jump to, the 60s or the 70s in uranium? What's that going to do to our equities? So I'm not going to get shaken out. That's my public service announcement to anybody listening. If you're in this trade right now and you're panicking and you're on these Twitter spaces trying to look for answers and trying to convince yourself not to do something or do something, obviously go with what's in your gut. Make sure you're okay and your family's okay. Do that kind of stuff. But I mean, I'm going to assume if you jumped into a uranium trade, you understood the potential returns and losses that are in here. So if a little pullback, and I say a little sadly when it's could potentially, in upwards of 20% is going to shake you out, yeah, think about it. But I'm sticking to it.
Same philosophy here. So I'm thinking about that Vision 3.0. So maybe on a pullback, I might dip a little into it. I haven't owned it ever.
I'll share one thing with you, Alex. My diving deeper into Vision 3.0, I started going deeper into the whole history about Strathmore, where all these companies originally broke out from. And obviously now there's Strathmore Energy Plus that's out there right now. This thing has such a tiny market cap. Go look at the land that they picked up in Wyoming. And Chapman, I think I hit you up on this one too, or maybe it was somebody else, just to understand the land in Wyoming and what they own and how it was past producing. These guys have a nice staked area in Wyoming. Obviously, the management team is 5-star. I mean, it's Dev and a whole bunch of folks that were tied to Fish and the original OG and Strathmore and a bunch of other stuff. These guys know what they're doing. They got a great team, and it looks like they got a good piece of land. And I think the market cap is like 5 million Canadian or 6 million Canadian. And I always look at myself and Alex, I think we joke about saying, we look for those lottery tickets. You drop a couple of dollars in one of these bad boys here, and you want to talk about torque in an Explorer. I mean, that's a $6 million Canadian market cap. If these guys do something, or announce something, or hit something, and they're starting a Joe program, they're doing some stuff. I mean, in a bull run, can you imagine what a stock like that could do? So I just want to share that with you because we were talking about Vision 3.0, and Dev is the CEO of Strathmore, and I had a conversation with Jordan Potts, who's a director there, and these guys are so excited, and I try not to ramble to share with what he told me and what I can share, but this part I'm pretty sure I can share it. If I can't, I apologize. But he was telling me these guys are so excited because the uranium is so close to surface that their drill financing is going to be so cheap to get this stuff done I think the joke he uses is that they could probably take a shovel and a pick and find uranium. That's how close to the ground it was. So again, I'm now in there trying to do some historical research as to who had that land back then, what it did. It was a past producer. So I'm trying to cover as much info as I can because, man, if you want some torque, that could be something pretty crazy. yes, along the lines of Kraken, yeah.
That's kind of we were kind of talking about that earlier, a joke, and I guess we were kind of, or I guess I had it as one of my standouts based on the name alone, but it just has the best branding possible. But we maybe did some due diligence on it, and it wasn't possibly the best. But it's up for you to everyone to figure out and look at.
Yeah, the only thing I'll say about Kraken is I think their CEO was a past news writer, letter, or something like that. The difference here with Strathmore is, I mean, these guys.
So it's like me going and starting a mine. Oh, well, damn.
Well, you know what? I probably have more confidence in you starting in that. I shouldn't say that because I have no say in Kraken. I don't want to dodge the company anyway. But for Strathmore, I mean, these guys have some really good folks behind them. So that's why I just sprinkle some money on these guys because if this market goes, the returns could be pretty nice. And if it doesn't, whatever, it's a good shot. We have our core holdings that we're all anticipating special stuff from. So we all hold the same companies, but every now and then you want to hold something that could be a little bit of a firecracker.
Mm. Yeah, absolutely. I mean, I still maintain that a lot of your gains are going to be in exploration companies. That's why I've been starting to put a bit more focus on the exploration side of things, and learning a bit more as to what I can. You're Frank, you were talking to CEOs here, and I think one of the one thing that I wanted to share with everyone, maybe I'll probably talk about this again if Mr. Chalmers comes on this space, and that was mostly just about it illuminated a bit of a blind spot that I think I had in terms of ways that I evaluated these companies, and in ways that I'm planning on changing in the future. So for the past couple months, in the way that I've been evaluating companies, I have purposefully gone out of my way to not listen to anything that the CEO or anyone a part of the company basically has to say about it. I don't want to see interviews. I don't want to, and that is mostly for protecting myself from basically being sort of promoted and sold on something. I wanted to just look at the raw numbers alone and glean what I could from there. But I think while it is no indication that someone is that a certain enterprise is going to end up being the most successful producer ever, getting a sense of the people there and what they want to do, I think is quite important. More important than I think I was willing to basically give it credit for. So this is just a part of the whole thing. Like, I'm not saying to people like I've changed my mind about energy fuels, but I'm just saying to people like, look, it was a productive conversation. So I like to put it out there for people to understand that, look, I change my mind, but and if I do change my mind, there are important reasons for why. So anyway. Also, I did want to say something real quick, and that is that over on the YouTube side of things, if you are just unable to come up to speak, perhaps you're listening on your computer, you can go to YouTube, and we do have a chat feature over there. So you can put your question in the box, I can see it, and we can get it. So there we go. So yes, Golf Donnie, is that Nates, you asked to come up? Is there something on your mind, or you just want to hang out on the speaker side of things? It's okay, either or. So.
Yeah. So thank you for your time.
So do you have anything to say? Oh, maybe not. So Patrick, are you there?
Well, while we're waiting for Patrick, I can give everyone an update on just a quick sort of projection figures for $110 uranium while we're all waiting. So for
Sorry,
instance,
what did you want? I was on a call.
Well, yeah, I kind of just threw you up, but if you want to talk, that's fine. But 92 had some good drill results, so that was a few days ago.
Oh yeah, they put out the I think the drill hole 25. They updated some info on that. Some of that drill hole they'd already announced, but then there was some updated details on that hole, which was pretty good. And then we also got some new information on a couple of the other drill holes. So all in all, it was pretty good, and you know that Gemini deposit is open in all directions. It's shallow like base loads. It's it's high grade by global standards, perhaps not high grade um, by some of the Athabasca hits where people get like 30% and stuff, but potentially there's still some of that around there. Apparently, that strike that they're drilling along is 1.8 kilometers, so they're only really where the Gemini one is, where they've been drilling. They're only really touching what a few hundred meters square is where they've been drilling, but potentially the strike is 1.8 k. So I spoke to the company a week and a half ago, and they mentioned they'd obviously done the aerial V10 testing, so where they fly the helicopter or whatever, and they do their radiometric testing. So next up for that Gemini area is to do ground testing, so radiometric testing. So that allows them to really drill in and focus on those the areas that they think is going to be the best to drill. So it's quite a bit more focused, the drilling, and the next one, obviously the next drill program won't be until I suppose the ground freezes over up in the Athabasca Basin. So I think they'll be quiet for the next little period. There's a little bit of drilling happening at one of their other tenements, but that Gemini one, the one that's all the announcements have been about, they won't be drilling that again until I suppose winter Canada time, so December, January, something like that. So yeah, there's a fair bit to look forward to, and they're hitting their they're doing really well, and then they're only capped at around. So the EV's around 35 mil. So when you compare that to some of their competitors, the obvious one is fine. Then plenty of upside still for 92E. So yeah, I like it, and I continue to hold it. I didn't buy any on that pullback to 35 cents, but if it pulls back there again, I won't make the same mistake. I'll probably buy a bit more, I'd say. But yeah, that's pretty much all I've got to say on 92E.
And I really, yeah, I want to see what they find at Tower. I wish they'd actually stop list. In my opinion, I don't really care much about Gemini. I care about Tower. I think that's where I want them to go. So the faster they get there, the better.
Yes, I think Tower, they said, so that's the one that they're going to put in a few holes in September. It's quite a small program. I think it's only 1.2K. It's like 1,200 meter program. I could be wrong on that. I can't remember exactly. But yeah, it's not a big program, but they just want to punch some holes down to see what's there. So what have you heard about Tower?
I mean, just as I'm looking at it on the map, I think there is a greater potential for high grade there. Just looking along
when
the
conductors. When you say high grade, you're thinking like that I'm really high.
Yeah, I'm thinking
grade.
like tier 1. Yeah, potential.
Yeah.
I mean, I that's why I like Canalaska so much. I would like to find someone that is looking for something high grade, but is not going as insanely deep as they are. Because Canalaska, oh man, those results were a little bit disappointing. But again, it's just the first hole, and it's just the first core, and we'll see where they go. But that they've got to find 20% or more there to make that one even start talking about the engineering to get a shaft all the way down there in sandstone with liquid. So yeah, that's it's there isn't really anything I've heard about Tower beyond that. I think there's just
There's a bit in the prospectus. If you check out the prospectus, there's probably a bit more in there.
Yeah.
But speaking to this guy at 92E, he was telling me the geologists are super pumped to throw down some holes at Tower. Like, they're pretty excited to see what they're going to come up with. Because I think it hasn't been drilled at all. But it's got some good radiometrics, so I guess we just got to wait and see what they come up with. But 92E in their presentation today that they released to the market, they actually referenced Canalaska, 9 meters at 2.4% with a 6 meters at 3.5%. But that's quite deep. That's like nearly a kilometer down.
Yeah, I think it was they seem to, it's like what your CPS counts turn out to be in terms of what the final assay is. It could just really depend. I mean, you could have a lot of potassium in the rock, I would imagine, and you'd get high gamma counts, and that would throw off your CPS. So it just depends, I guess. We do at least.
Have they put out CPS?
Have they
put out some CPS.
Canalaska has put out CPS counts.
What was it?
They had upwards of 39,000.
Sheesh, that's okay. That's higher than anything that 92E have hit.
So
their highest was 26,000.
Honestly, there may be something there that is 20%, but it's like 20% at like 0.1 meters. Not that almost becomes kind of a joke. And that I think what they have decided to potentially do. This is recklessly. This is one of those things I would call a recklessly bullish interpretation. Like I'm making up information I want to believe. So just put that out there. But I think their goal here is they've wanted to say that they wanted to extend. They actually extended out the core beyond what their initial strike was, if you'd call that a strike, what they were planning on, in terms of the mineralization thickness. And I think that's because they want to play this like it's a big deposit right now. And the way to do that is, it's 6 meters. Oh my God. Wow. Isn't that amazing, you guys? It's not horrible. It's not a horrible assay. It's enough to basically keep them interesting, but we'll see. The good news is that we have some idea now as to what for this mineralization, what CPS counts might yield in terms of an assay result. So, for instance, I mean, if we get more, if we get like 60,000 counts or something like that, well, then we could say, well, all right, that's 6%, or something along those lines. So we'll see how that all goes.
Well, it can be up and down. I went through the process of going through a lot of the CPS reads on drill holes over the last year or so for a bunch of different companies, and one of them, Fission. So Fission had a max CPS hole of 10,000. But that came out at 8%. They got about 46 meters at 8%. So CPS is like a bit of a guide, a general guide, but it can be completely.
If you've got, if you have certain mineralization that essentially shields a bit. I mean, gamma is sort of hard to shield, which is why they use it. But it can really depend on. There's a reason why you do really end up having to have the final assay numbers, and why the CPS counts is not something that's reached as gospel. Sandra, you've got your hand up, and then we've got a couple questions on the chat, and we'll address that after that. So yeah. Anyway.
Thanks, Chappie. I was just going to say to Pat, have you watched Baseload's most recent video release about their Accio, because he was quite interesting. He was just going into the historic record of which Athabasca deposits have actually gone into production. And basically, I mean, I know James has to talk up his own book, but it was quite interesting that if his figures were correct, that it was the lower grade deposits that had actually gone into production. So I was just going to say to Pat, have you seen it yet?
I've seen. I saw him talk about that in maybe like a Crux interview or something a couple of months ago. Maybe he's talking about it again.
It was just about about a week ago. So,
okay,
I can send it. I can send the. I can send the URL to Chappie or Alex, and they can put it on the Nest. But it's quite interesting. He talks a lot about grades, and so it just gives you a bit of understanding of when you do have to interpret the results.
Yeah, well, I think with both Baseload and 92E, I don't think either company expects to find, some giant resource, super high grade. They've been pretty honest and upfront that it's not going to be that. The best hope is that it's something like maybe 50 million pounds, 60 million pounds, and it's at like average grade 0.2 to 0.5%, something like that. But then it becomes mineable, and then you've got a nice little business going. So yeah, I don't think it's going to be anything like what we've seen elsewhere in the Athabasca Basin, but definitely there's money to be made.
Yeah, I agree. Yeah, it's looking that way. So anyway, I just sent them to Alex and Chappie the YouTube address if they want to put on the Nest. But it's definitely worthwhile watching. I just wanted to mention that before we change subject. No, I'll quickly post it. I'll quickly post it now. What's that? What was that? Oh, how do you do that? Do you just share or? I'll just post it on my. I'll just tweet it now. Yeah.
Yeah, just share it, and then I can have a look.
Just bear with me.
I like watching all of his interviews. I mean, even though it's not 92E and I'm not invested in Baseload, it sort of seems like they're both working on the same deposit anyway. So listening to either of the CEOs is always interesting.
Yeah, absolutely. I think for me, so to get to some of the questions here, 92E did have good results. Why do I hate them? Okay. Jesus. All right. Thank you for getting, don't hold back, folks, please. I actually really don't. I don't okay, so I will say that their most recent results after this, before this, this, frankly, in my opinion, was kind of a summary announcement. Of the summer drill program was actually better than essentially what they originally announced, where they had some barren holes that might have indicated that the deposit wasn't quite as open along the strike, or open along the what's the other one that they would say? I keep on forgetting my mining terms because I'm not a miner. But anyway, so they had some results that essentially said that, hey, we're open up dip. There we go. So open up dip, and then they had some barren holes that sort of made it seem like where they were trying to find some mineralization closer to the surface, they weren't finding it. The major issue that I have with 92 at the moment is that I would be hoping, it's not an issue with them, it's an issue with the Gemini deposit. And that would be that they're not finding what I think is really key for a deposit of this size, which is, those 1 to 2% assays that, make this, that would make this a large deposit, let's say. Essentially, to that end, it would be more material for them to potentially be able to high grade if they really need to have that flexibility in production. I think that's really important. So yeah, we'll see what they're, like I said, I'm really excited about Tower. I really want them to go to Tower. I think Tower is going to be the interesting one, just because it's deeper into the basin, and it's closer to some to some tier 1 assets. The other one,
Chappie,
yeah.
I just tweeted that URL, that YouTube address, just on my regular feed. So if at all you can share it. Otherwise, if you just go into Baseline's website, it's the most recent video, or the YouTube channel, I should say. It's the most recent video, so it's worth a watch.
Yeah, absolutely. Yeah, for certain. Okay, let's see here. Shit. How do I do this again? I don't know. Jeez. There's a way to
Frank,
do
were you about to
this.
say something earlier?
Yeah, I just got a DM from the folks at Azarius Capital who I joined right when I called them out to see if they want to speak in regards to Terra. They said that they weren't sure their compliance officers would appreciate it, so they gave their best regards to everybody in the call, and that's why they didn't speak and chopped off.
Oh, well, okay.
That was polite.
Yeah. I mean, it's fine. I mean, they can just tell us about their investor presentation, but I'm sure compliance is, if they're not sure, they're not going to do it. And that's fine. It's no hard feelings. I know. There's a way to do this. Wait, maybe it's over here. Let's try this. Okay. The other one was Virginia Energy Resources or whatever else. Oh boy, that one. Man, I need to turn down my mic because I see I'm clipping on YouTube. So, they have a deposit that it's basically this family's company that it's really fun. You see, when they went public, and you could sort of look at the satellite images, and they put a pool in their backyard and a tennis court, or maybe it was actually the tennis court. Yeah, they put in a tennis court actually. And they bought up some surrounding land, and then they took something all the way to the Supreme Court to try to overturn a Virginia mining ban. That didn't exactly work out for them, and they had to write down a whole bunch of assets. Yeah, that one is. I mean, sure. I imagine there's plenty of upside if you could somehow, get something. I mean, I think you stand a far better chance of mining on the Navajo reservation than you do mining that deposit. That's just my personal opinion. So anyway, there's that one. And I think, yeah. So we'll see. I think there was one more question. Why am I 90% cash? And I just said I'm 90% cash because the bond market is saying that we are in for a bit of a sell down at the moment. I think so I'm just waiting to see what the markets are going to do. And I think we are in for a bit of a lower low on the S&P and the NASDAQ. And that's going to bring everything down with it to some extent. And from there, we will see where things go. But it was more or less a matter of I think we were just running up a little too quickly and just taking gains and getting a little bit spooked by the bond market. So yeah, that's that question there. So anyway.
So if anyone else wants to jump in, feel free to just chat if you want to. We got a lot of people in the room, just telling us how you started investing in it and what kind of stocks you look at. Just feel free to jump in.
I've got another question on the YouTube. This is gonna be fun. I'm sorry, you guys. I'm gonna be like telling you guys like, oh yeah, there's another question on the YouTubes here. I have any thoughts about GoVX? GoVX is they are basically drilling over already known deposits, essentially. Not obviously known in their size and economic feasibility, but let's see here. How would you say this? Mandalay some word starts with an M. It's just north of Dasa. I never remember these things. That deposit was discovered by, or that mineralization occurrence, you'd almost want to say, was discovered by the French many decades ago, from my understanding. The unique thing that you have to understand about Global and Dasa there is that Dasa was a true new discovery. That was just happened to be the one area that the French just never drilled in, and they happened to just find this quite, for the area, fairly high grade ore. So that's the difference, I'd say, between a Global and a GoVX. That said, if Global gets started in a big way, I think GoVX will benefit from that in some way, shape, or form. It just depends. I think GoVX might be, depending on how they are able to fill in the deposit, if they have any infill drilling left to do. I think they could be a takeover target potentially. We'll see. The Chinese are going to be looking for uranium here fairly soon. So there you go. But yes, so see here. How is Kraken doing? Well, wait, never mind. They haven't opened up yet because that's on the TSX exchange. Jesus. I'm sorry.
So what's your strategy, Chapman? Just hold on until you see a hit on the support level, or what?
I think Cameco will be above support. 2250 is above support for Cameco, and that is a buy point for me. If Boss makes it back down to $2, that's a buy point for me. If Silex makes it down to $3, that's a huge buy point for me. So there's a couple different ones there that I'm waiting for. I'm seeing if URG is going to go down to back down to $1. If that does, that's also another buy for me. And I wanted to maybe talk a little bit about my pricing strategy there. It's a bit. I feel like I make up these things honestly off the top of my head, and I come up with these little ideas. This metric for valuing deposits. Maximum revenue potential over market cap. I don't feel like anybody was ever doing that one. But basically, the way that I see it is once I have an idea of projected cash flows, and then hopefully at that point also discounted cash flows through amortization, instead of using like NPV 8, because I view NPV 8 as a bit conservative, more or less of a go or no go, and I actually prefer to do an amortization of what I actually think capital costs are really going to be, and I've done that for Global as well. So the way that I see it is that a buy point is when you have an acceptable return not only on projected cash flows, but also as well in earnings. Because you have, there's two ways that you can basically value a stock. You can value it on projected cash flows in the future, if you're thinking, like what you're going to get in terms of dividends or cash flows in development costs that they can then basically put into another mine. Liberty was talking about a gold mine in Australia it wasn't Liberty, it was someone else that I know. Sorry, I talked to Liberty about these things. I talked to Liberty about gold and silver, so immediately when it says gold and silver, I go to Liberty. Sorry, it was someone else in Australia who was talking about a gold mine there that is using existing cash flows to bring another deposit into operation, and then they'll have essentially cash flow streams then from both those deposits. That is my goal number one when I'm looking for investments in these things. I want to see that they're going to be able to take cash flows and invest that into future production, while also giving investors a decent return, and at the same time that maintains the going concern for me, and maintains the stock price. The other part of that is you could have the market that could value the cash, that could value essentially the company based on earnings. Well, you're going up a little bit further, and you're just stopping basically at the income statement there instead of going all the way through cash flows at that point. So if you are, a lot of times your value, your like for instance your buy point now at global, let's say, you would be really banking on earnings there. Assuming the current uranium price, actually assuming a price of, let's just say, $75, $80, you would be really banking on that the market is going to value earnings, and that's where you're going to get your sort of your asymmetric returns there that is commensurate with such the risk. And to me, that gives me two avenues of gains versus what I see as one avenue, the avenue of the negative, which is that it goes down. And that somewhat offsets the risk in my own mind, in that when I see that there's two possibilities, it de-risks that investment for me. Whereas you really have to start believing in a higher uranium price that unfortunately just has not quite materialized yet. And we really don't quite know how high that price is going to go. More crucially, how high it's going to be sustained. So to me, that's how I value essentially my buy points. And I would say that my buy point right now on global is between $2.30 and $2, and anything below that, of course. But that is the range in which I would start accumulating. Just doing a little bit by bit here and there. I think it's I think my strategy beyond that is to, once it is going down and once it's reached the buy point, then you just start accumulating a little by little. You don't really want to go all in. I think there's some seasoned investors in here, and that they would know to do that, not to do that. Just simply because, if it becomes, yes, if it could, of course, always become like a swing trade again. You could have Cameco at 22.50 and it goes right back up to 26, 27. That could be a swing trade there. But if you buy at 22.50 and then a little bit at 20, then 18, assuming, I think the low in this near term over the next couple of months is probably going to be 18 on Cameco. Some people here are going to be disappointed to hear that. I think on both sides here. I'm sorry. I feel like, honestly, my feelings are, I feel like I'm not the super bear in the near term, but I'm also not the mega bull either. Sort of feeling like I'm stuck in the middle. It's a nice place to be, honestly. So, but yeah, I would say that's there are certain things that I am ready to basically make huge allocations to, because I've effectively done the due diligence on them, and there's a couple that it's the globals, it's the Camecos, it's the URGs, it's the bosses, even a little bit of the Paladins of the world, perhaps even the Lotus. I'll have that one done by. Lotus is a little bit unknown at the moment, just because they still have a little bit of ways to go there. Granted, they have a mine, of course, but and then beyond that, allocating, keeping some cash to basically allocate to the Explorer plays as those become known. So that would be the strategy for uranium. That, and then once Silex goes down, buy a whole bunch of that. So once again, I don't know what kind of position I'd keep in Silex now, because it's I think they're they're probably, I don't know, they're probably going to top out at about, I think what are they at the market cap at this point? I think it's they're at 760 million Australian. I think they're probably going to top out in the short term at about 900. And I think they'll be stuck there for a little while until we hear some more solid news on the enrichment side of things. But I don't know. The Liberty will tell you that the RSI on Silex is a bit overbought at the moment. So even at its price today, it's still probably a bit overbought. So, but as Patrick has pointed out to us in chat before, whenever that thing goes down to about $3 or even $2.90, someone just starts accumulating like crazy. And you got to join the market, and that's where I would accumulate too, because that's where it's being bought. So anyway, we have P up now. Alex, because you've got something else too.
Yeah, I just invited him up. Do you have anything to say? I know you're. When do you get back in? I guess that's the question I have.
For me, you're asking me when I get back to the outside?
Or if you are, yeah.
Not anytime soon, because I'm still expecting. I'm seeing the charts, the bond news, the DXY, DXY, and the BTC are breaking down. So all the indicators are aligning. So I'm still on the bear camp, in the bear camp. So I'm not going to repeat my stance here. Yeah. So unless the charts tell me, okay, it's time to get back in. If the charts prove me wrong, then yeah, I'll get back in. But I don't think so. Not anytime soon. I think maybe in a couple of months. I'm still expecting the market crash to come pretty soon, and it can last for at least 4 months. So I'm expecting. I'm not doing anything for the Q3 and Q4. That's my plan. But my question to Chapman is, I just read a thread written by Clay Montgomery. He was saying something about the Russian ban. So, any view on this? What's your take on this? If that's the case, that then the overfeeding case is not happening.
Well, okay, so he's right, and I think he's really honestly raising a lot of important points there. I'm gonna go ahead and I'm gonna try to put that. I'm gonna go ahead and try to put that thread up in the nest here, just because it was, I think, very. It was pretty important in what he was saying there. And I mean, this is sort of the part where it's kind of frustrating in that, when I say like it feels like we're sleepwalking into a disaster here, and just simply because you have a Department of Energy that's still. I mean, let's face it. The Department of Energy nuclear is NNSA, and NNSA is having to be, dragged, kicking and screaming, basically, to downblend some highly enriched uranium into helium. In the bill that's in Congress right now, they are basically being told by this date you will have this much material made. And that's how much Congress is. And this is the Senate and a House bill. There's the same bills. They've been introduced in both chambers. It will probably be added to some omnibus bill, sometime later this year. Who knows? But this is just how much that they're just tired of their shit. And so you have essentially, what I mean to say there is that you have the people that are in the government, that are the bureaucrats, that are, that care the most about uranium. They do not care about domestic enrichment. all they really want to do is basically have, they want to maintain their HEU supply, and they want to have some unobligated uranium that they can go make some tritium with at Watts Bar to basically make sure that we still have hydrogen bombs to, threaten everyone else in the world with. Maintain the sword of Damocles and all that. So, there is that it's just something that isn't quite being taken seriously yet. And the thing that is the bull case in that instance, or I wouldn't say the bull case, is the case that it is being taken more seriously, is that every indication that we've heard so far is that none of the utilities are contracting with 10X going forward. So they're not buying any more Russian uranium at this time. What will happen is that they will continue to receive likely the orders that have already been in place, but they are not making any new orders. This is why I am very bearish on LEU. And I know a lot of people, I'm sorry I told people to sell that, and then it went up 80%. I feel bad about it. But at the same time, Silex went up 180%. So, I told you what to buy, and if you just done what I told you to do, you'd be much better off. That's my message to the LEU people. Now, yes, LEU, they went up 80% because they had just an absolutely fantastic quarter in which they somehow managed to report record earnings while bleeding another $60 million in cash. This is their sort of interesting accounting practices that I talk about with people. So, it's actually what he's saying effectively would be somewhat bullish, because it means that if there is no supply coming from let's say from Russia, that you're going to have a higher uranium requirement to basically keep current reactors operating, because you're going to have to jab more overfeeding. It also becomes a lot more bullish for Silex, because then you're going to have a whole bunch of high assay tails that Silex can take all the way down to 0.1% tails assay. And that's their wheelhouse right there. So there you go. But it's it is a concern, and I think what ultimately the frustration that he is really sharing there in that thread is just the lack of seriousness that is being taken here. And yeah, I think it's an issue. It's something that needs to be you need to keep your eye on, because all of a sudden, we could find out that we're just going to sort of pretend that we're buying from the Russians, but we're going to pretend we're not doing that, at least for the time being. And that does, in many ways, quite a bit limit the effects of overfeeding. It doesn't necessarily change the bull thesis for uranium in a huge way, but instead of, say, 90 to peaking perhaps to $100, $110 for a pound of uranium, you might peak at 75, which again, plenty of producers are very profitable at, but it just depends. It does narrow your investment focus a little bit to lower cost producers. So but anyway, do you have anything else for us? I guess, or any other questions? So,
I guess since we got P up here, he's on more on the bearish end. So, what is your aside from just cash? What is your strategy? Just hold cash until everything crashes and there's chaos.
Just cash. Cash is your best friend, and sometimes it's better not doing anything, because if you keep your dry powder safe, then it also means that the when you get your timing right, after this chaos, the upside will be so huge that you don't actually need to do anything like at the moment, but the return that you get afterwards will be just so good that it justifies your non-action during this period. So it's pretty hard to get be super profitable in shorts, because there could be a lot of relief rallies. Is difficult, I would say. At least I'm not good at shorting, but my strategy would be just holding on my cash and wait until everything breaks down. I think for uranium stocks, you can see that only the CCJ has the uptrend has got its uptrend remaining intact, but for the other juniors, most of them are just showing distribution pattern, and I'm expecting a further breakdown. And many of the names, even the bigger names, I'm expecting at least 40-50% drawdown from this level. And if we're talking about smaller names, maybe something more extreme would happen. So if that happens, when the chemical and the SPX tell me that the bottom is in, I'll get back in. I think that even as I told you before, even if we are to, I'm not looking further away, but even if these names just get back to the peak in 2021, the return will be huge. It will be a 4-bagger, 5-bagger, something like that. So I think that itself is already quite attractive, and the risk reward at that point would be huge. It will be so attractive that I think it will be a great opportunity to make some really good returns. But at this level, I'm staying away from anything. I'm not longing anything.
So
even Apple is showing some really bad chart pattern. I think it's topping at this level, unless it makes a new high. Like, I'd never say never in this market. If Apple and Tesla, these names make new highs, or they try to break out, then sure, I'm wrong. But I just don't see it happening. Even in 2008, Apple was had a crash in 2006, late 2006 or 2007. I forgot, but it had a huge relief rally, and it was almost touched the previous high before it further crashes down below.
But basically,
So,
I guess one question or Illinois, and then I'll get. So basically, Illinois. Sorry, is it Illinois or Illinois? It's Illinois. I'm sorry.
It's Illini.
Illini. God, I'm getting it wrong both times.
Illini,
Jesus.
University of Illinois.
Illini. So essentially, your indication, and Alex just sounded just totally dejected asking this question. So I want to cheer everybody up just a little bit here. Was that essentially when the broad indices hit what you consider to be the bottom level, that's when you're ready to get back in.
Yeah, at least they must be so oversold that I think they will be and the price levels of these stocks are getting so attractive. So if you read the charts of uranium stocks or some other commodity stocks, usually when one cycle ends, the drawdown can be really huge. Like the UUU, it actually the retracement back then from the 2018 peak to the 2020 was like 80% down. So if something like that happens, I think is perhaps is not a bad idea to get back in. The risk will be much more limited.
So
And yep.
Here's where I'm going to push back against you. Number one, I agree with your sort of broader take on risk assets. The S&P 500, on Apple, especially on tech stocks, they're overvalued. There's clearly a sell-off going on right now after a bear market rally. We're probably heading into a recession. You have a Fed, rate hike tightening cycle. I get it. Risk assets are selling off. Number two, if this were any other, broader market downturn or certainly a recession, I would normally agree with you also on the picture for energy. I mean, if and your view is the same view held by George Noble, Michael Belkin. It's the same view held by Three Aces. It's the same view held by a lot of really smart people. Where I'm going to push back though is I would start to take a look at Europe, and I would start to take a look at heating demands, and also sort of what's driving the central banks to raise rates and tighten financial conditions. And what I would say is that the setup here doesn't look like 2008, 2009. It doesn't look like 2001. You got to go back to like 1973, 74. This is an energy-driven stagflationary recession that we're setting ourselves up for. And the reason that the central banks are tightening financial conditions is due to energy. And yes, normally oil and energy has some beta to it. But if we get a cold winter in Europe, weather, the physics and weather doesn't care about the economy. That's what's going to ultimately be driving demand here. And energy might not have the beta that you expect it to have this time around.
Yeah, very true. I think everybody is recognizing that there's an energy crisis going on. But if you look at the 1970s, the indices in 1969 to 1970, I think the drawdown was like 30%, and then from the 1973, that was in the midst of the inflation cycle. SPX went down 50% or more, I think slightly more. So if the indices go down by in this magnitude, what can you expect to happen for the risk assets? I think stocks remain stocks. They're not commodities. And very often I've seen many cycles like this where the commodities price may still remain at elevated level, but the stock prices just plummet.
Yeah.
So and the market really hates uncertainty, and you never know what's going to happen when the market crashes, and if there's a liquidity crunch, like what we experienced in the peak of the bear markets. What can happen? So I'm not saying that all of these uranium stocks will necessarily go down by 80% from the peak, but I would let the charts to tell me when it is oversold. It can be like 75%, it can be 80%, it can be 85%, it can be 65%. But ultimately, I would wait until there's a panic. When there's a bloodbath on the street, when everybody is crying, when everybody is suffering, then perhaps it might be the good time to get back in. But right now, I still see a lot of complacency. As you can tell, like for last week, everybody in the uranium space got so excited about the Japanese news. To me, that was a BS, because there was pretty much known before that. Everybody already knew about the restart plan, and Japan has to go nuclear no matter what. So everybody was so complacent like last week and got so excited and was expecting a moon to happen very, very soon in the near future. I just don't see it happening. And I think the indices are just telling me it's time to sleep and do nothing. Maybe if the charts, if the market crashes and the energy stocks and the energy trade may still be okay for a moment, but very often I think my experience tells me even the strongest sector will collapse towards the end of the bear market. So I would expect the same to happen in this cycle as well. And if people are already worried about the energy, I assume it has become a crowded trade already. So everybody is longing energy. And when the market goes south, I think they will be the last to sell off. And I think I would expect the same to happen. Maybe I'm wrong, but I just doubt it.
All right.
So, P, I guess, Chapman, do you mind? Or
No, please go ahead. No, we may talk about the same things, but yes, go ahead, please.
So, P, I guess where I'd push back is that number one, in many respects, energy is kind of an uncrowded trade, at least in traditional fossil fuels. There's been a great deal of ESG-driven divestments. If you take a look at valuations today, stocks are trading at 40% cash flows. In coal, it's 70%. They're trading at 70% free cash flow yields in coal. I guess what I would say is that, yes, in 73, 74, oil stayed flat during the recession while Exxon sold off. Some of that was driven by price controls and a lot of screwed up stuff that the government did to interfere with normal market clearance that Exxon had to suffer through. That was part of the reason that they were down 50%. And then finally, I don't think that oil companies were trading at, I don't think they were trading at 2.5 times earnings going in to the recession. So I guess what I would say is that you're basically by being a bear on uranium, you're betting that the sentiment translation from the broader tech sector and the overall S&P 500 is going to translate more heavily over to uranium than the sentiment translation from energy. And my take is that if there's any sort of competition between Dutch TTF, which is trading at $400 per barrel equivalent right now, actually even higher than that, if there's any translation between that and the kerosene or heating oil market where we can ship it internationally to Europe, if there's any substitution over in Europe for that, that's going to basically hold energy prices up. That's going to generate a lot of cash flows, from American producers, and then those cash flows are going to have to go somewhere. And a lot of times they'll be probably staying in energy. Some of the money will go into bonds. Some of the money will go into cash. But I think some of the money could also stay in uranium. And I'm not sure we're going to get the pullback that the biggest bears are expecting here.
The problem is when you have a broad market sell off, the market really doesn't care about what we think about the fundamentals. When there's uncertainty in the market tends to sell off. People want to stay on the sideline and see what happens. And secondly, if the bond yields continue to go up, which I am expecting to see in the coming weeks, there will be a significant pressure on the valuation of all stocks. So if you're talking about uranium stocks, which largely comprise non-revenue, no pre-revenue companies, they're not making any profits. They may not even have a revenue, some of them. What can happen? So it really doesn't matter. Sometimes, I don't know. In my experience, sometimes it really doesn't matter about what we think about the fundamentals. I personally have traded some of the stocks. I made 10 backers. I made quite a decent amount of money out of it. Despite its really good fundamentals during that time when market crashes, the market doesn't care what I think about the company. It still got halved. Although I made it like 10 times from the bottom of that crash. sometimes it doesn't really matter. The fundamentals can still go strong. I'm not saying the energy trade will not pay off eventually, but in the meantime, if the market does want to go down, if there is a big crash coming, I wouldn't stay on the long side. I'd rather just stay on the sideline and just wait until the dust settles. The market sometimes doesn't really care about what we think, and even from the fundamental perspective, if we are seeing what the Fed is doing is the demand destruction. If the demand just slows down, it can cause a lot of pressure on the commodities, and I think that is what we are seeing right now. And the oil price, despite all of the so-called bullish news and the energy crisis, still trading at $94. Is nowhere near the 130 that we saw in
That's
a
true,
couple
but
of
it's at
months ago.
$94 heading into recession in a rate tightening cycle, while basic and inventories are going down, and the oil companies are printing money right now. Most of the small cap ones have committed to returning 75% of free cash flows
Yeah,
to investors. Look, you're right. You're right. You know, the the stock market price every day is set by the market clearing condition, right? It's where buyers are willing to sell to sellers. That's basically what drives price. It's not set by the holders. It's not set by the company. It's not set by the fundamentals. It's set by who is selling and who is buying, and what price they're willing to transact at. Um, where I'm going to agree with you is that yes, if a company needs to go out and raise cash, it could be in trouble. If they need to increase the supply of stock and there's not a lot of buyers, and we're heading into recession, yes, the price definitely would come down in that circumstance. But where I'm going to push back to you against you is there's all these small and medium cap stocks that have got 30 or 40% free cash flow yields. They've got zero debt. They are committed to returning 75% of free cash flows to investors. That cash is going to wind up in the pockets of energy investors. And what are they going to do with it? Well, I think they're going to take a look at all the substitution going on in Europe. I think they're going to take a look at everybody exchanging, $500 BOE natural gas for kerosene and burning that. They're going to take a look at some of the nuclear power plant extensions going on in Europe. They're going to take a look at the fact that EDF right now is operating at 50% capacity on the nuclear reactors, and they're probably going to scale that up. They're going to take a look at all of that. They're going to see the potential demand for uranium and the ball, and they're going to start to pass the ball potentially to producers that have existing production, that are already producing, that have revenues, and you could see Cameco rally earlier than you would expect in a market pullback if you're seeing returns of capital to energy. And I just don't see oil. I don't see oil breaking 75, and I don't see natural gas in Europe this winter dropping. And there's a lot of profits that are getting made on that right now.
Oh, I just realized the YouTube mic was off. Never mind. I'm sorry, people on YouTube who's ever watching. There's like 5 current viewers who are not hearing anything. Anyway, what was I saying? So, when this is sort of where I do get a little bit frustrated on the sort of the more, I don't know. There are ways in which people manage counterparty risk. There are people that tend to be a bit over bullish. Then there are also people that tend to be very, very bearish. Very, very bullish, very, very bearish. This is sort of where everybody knows who they are here, okay? I like everyone. I'm not saying this as, everyone's bad or just like, that I completely disagree with people or, that they're shouldn't be talking or whatever else. I mean, everyone has their perspective on things. And I think this is where I feel like I'm able to whoa, and how great is me. I know, great. Yeah, I know. This is another one of those isn't Chapman just so awesome speeches. But where I am finding, I think the middle ground is that, this is, in my opinion, a swing trading market. And I know there was like a lot of people, there was some people that said that, wouldn't it just be fantastic if the market just kept going up, and I forever lost my buy point. Like, okay, Jesus, Jesus, wow, that's a little much. I don't really wish losses on anyone, and that's or lower gains or anything else. Like, that was a little mean. But having said that, I don't really, I don't usually engage in those Twitter spats. I thought about it. I've almost, but at the same time, it's 7 reactors out of Japan, and I'm sort of sitting here going like, what has really changed fundamentally in the thesis in the market here? It's like not a lot, and everyone's like talking about Elon and just like, sheesh, I don't know. I'm just like, I wish everyone would just stop getting their hopes up so damn much and just treat it like adults and just like it is what it is. Like, it's pretty plain as day. We've seen these volatility spikes in the energy sector, in uranium in particular. I wanted to say something now that I have Elena here. Like, what do you think about Vermilion and the fact that, hey, those Vermilion bulls, I don't know, I would say to the uranium bulls here, like, you guys need to step up your game, because there was nothing that could keep Vermilion down on Friday. So if you guys,
I feel like being on Twitter and talking about Vermilion. There's that meme going around about that 16-year-old girl shouting in the ear of that 16-year-old guy at the concert. I feel Vermilion's a good stock. I think it's got a pretty high free cash flow yield. It's pretty diversified too, and it has some Europe exposure to it. There's a lot of good stocks out there. I don't own it. But I wouldn't necessarily tell people not to buy it and not to do the research on it. I do think it's an opportunity as well. I mean, every natural gas stock that offers a 40% free cash flow yield is an opportunity.
Yeah, absolutely. Yeah, absolutely. Okay, I completely agree. Absolutely. Iron Man, you got your hand up. What's up?
Hey, look, just a couple of points in the question for all you cash bears currently. But look, firstly, I would just go on the swing trading part. I don't think a lot of people do it. Like, the people are really into it. Yeah, fantastic. And you focus on that all day, every day, you can make great money. You got to learn, and it's a little bit of luck in there. But if you're working 9 to 5 and you're just a retail trader, you meet someone off the street, tell them buy your RNM or something like that. But point is, swing trading's only for a few. It's not for the masses, I would say. Anyway, but on that and your cash positions, why don't you guys, if you're predicting such a large drop, commodities generally, perform better in large equity drawdowns. And yes, equities are equities. Miners are going to go down with the rest of the market. But why not rotate into something like gold, silver, platinum, anything more defensive than sitting, in US cash at 9% inflation? Like, why not rotate into something else that's more defensive than cash?
Well, I think it really depends if you're comfortable. But I don't know. In this environment, if we are already in the middle of a stagflation, sometimes maybe is, I don't know. Some people actually may go for treasury. I don't know. But sometimes it really depends on your investment style. For me, I'd rather just sit in cash because it's safe, firstly, and secondly, and I can stay flexible. So if I change my view, like a week later, then I can easily do it. Like I can immediately use my cash to do what I want to go. But going for metals may not be necessarily a great idea. I actually lost quite a bit of money in 2020. In the gold trade, I was like 200% long gold in 2020, early 2020, before the COVID crash. So that was a pretty good lesson for me because I felt gold was actually pretty safe, and I'm betting on inflation and a commodities bull cycle. But gold also went through a crash during COVID. So it really depends. If we are expecting what I'm expecting to see is like somewhat a massive sell-off across all of the asset classes, then maybe cash would be a pretty good idea. It really depends. I'm not saying you shouldn't do anything like me, but I'm just sharing my experience. Sometimes maybe holding cash isn't a bad idea.
So, Iron, I guess, I understand that historically gold has tended to have either a zero or a slightly negative, beta to it. It historically it has been a risk-off asset, but that's not necessarily how it's been behaving over the past 15 years, and that's not necessarily how it's behaving right now. When people, are anticipating, higher interest rates out of the Fed, and we see, interest rates move up, gold tends to sell off. Um, and that isn't necessarily a good place to park money necessarily.
So to clarify as well on the question, it is commodities in general. I would lead that question on to, hey, if you're still interested in uranium and believe in the energy play, wouldn't SPUT just be a good purchase? It'll be more defensive than the miners themselves if you still, want to hold something in the thesis. And then other sort of, royalty companies, etc. You name the metal. It doesn't have to be gold itself as like an inflation hedge. But if you believe in commodities, is there anything out there that you believe will perform in a downward market? I know, like, for example, uranium in the 70s outperformed most other commodities in a high inflationary environment. So is there anything else do you think nowadays, rather than just cash?
Okay. I think Europe is going to have trouble this winter. And I think that the higher natural gas prices in Europe go, the more trouble that spells for global primary demand overall. So what does that mean? Well, the question is whether there's any substitution between kerosene or heating oil or the heavy distillates and natural gas in Europe, because some of these facilities can be converted. And in the very worst case, in an emergency, Europeans, rather than freezing to death, will go out to they go out to the hardware store, and they'll buy themselves a kerosene heater, and that will drive up distillate demands too. So I would say that potentially in this recession, one thing that with certain it's certainly going to have a lot less, positive correlation to the market. It is going to be heavy distillates, and that means heavier oils. So not every oil producer has this, but if you particularly heavy oils, or maybe also if you're producing propane, which can be transported, um, that can help out Europe, and that can basically those oils would come into demand if Europe was really suffering, and we were going to really be seeing primary demand falling off out of Europe, in this sort of global synchronized recession. I'm not sure that helps you at all, but it might be a place to look or to think about.
No, interesting answer. Like oil and gas, of course, but I think it's a little bit of a crowded trade currently. Like, yes, things have dipped slightly, but yeah, just wondering other defensive plays if rather than just pure cash.
Well, I will say this: the only thing I see up in the green today on the ASX is Whitehaven coal. So, I mean, granted, it's just barely in the green, but it's looking like it's actually getting bought pretty heavily right now. It's actually
it's a massive down day on the ASX in general. It's 2%.
Oh yeah, I mean, when you see BHP down by almost 2%, I mean, okay, wow, that's Australia's bread and butter there. So, sheesh. I mean, and honestly, it's like you can just, I still am, for me, it's still like, do I buy Zim? I mean, I know they're coming out with, they've got some LNG tankers that are coming online here soon, and it's just like, I keep on looking back at shipping. Like, shipping just seems to be like, it's like, apparently they it just seems like natural gas. They say that, I think that's the thing they say about natural gas is the widowmaker or something, or that just it's where capital goes to die. I think shipping is exactly that same trade too, because it just seems to be like the market just keeps on selling the damn ships down. So I don't know about that one, but still looking at that. I still look at ship. I mean, I was like, just the other day when I was looking at shipping once again, and it just all of a sudden, like, for just, it's like the last time I literally looked at it, it was just like a day or two ago. Oh yeah, Star Bulk's at $26 on the 23rd, and then I go the next day. It's like, holy shit, we're down to $20. Like, what the hell happened? So yeah, there's it's anything. I think you trade. You've gotta. I think it's why I stopped trading everything except really, uranium and a few things here and there. A few, like maybe just one or two stocks, but it was just like other sectors. It's frankly just too hard to keep track of. I keep on wondering when I'm gonna go back into oil. And I'm just sort of sitting here thinking like, what am I doing? But
Chapman, I think this is the time to do it. I mean, you're seeing the signs that, to me, say that it is kind of a bullish situation. You have Saudi Arabia complaining about the difference between the physical market and the paper price.
Yeah.
You have Jennifer Granholm sending out secret letters to refiners saying, whatever you do, don't export products. Don't export products. We're having an emergency situation with inventories in the Northeast. And meanwhile, she's still trying to talk down the price of oil. The best way to increase inventories is to raise prices.
Is to build a damn pipeline from Marcellus,
or to build a pipeline, or to build the Keystone XL pipeline. But if Biden does that right now, he's going to expose himself as having been wrong.
Yes. Sorry.
I mean, the wonderful thing about being a trader is that we tell ourselves that we're wrong all the time. It is such a privilege being able to do that, rather than to be stuck as a certain politicians and never being allowed to admit that we're wrong and change our minds and come with a better strategy.
Yeah, absolutely. I think there will be safe plays. I still think that I don't think that we're going. Look, I know there's certain people that want to see it. I know there's certain people that want to see it that are now actually up here on the dais. And I'm sure we're all going to be hearing about, how Cameco or how everything else just all sold down and go to the highs. I get it. We're all it's mega bears today. I don't think we're going to see, I think Cameco bottoms out at $16. The fundamentals are just too strong. I think, you will be, but it's going to be very, very quick. You will be lucky if you can get your bid ins at 18. Like, if you really want to buy Cameco at 18, I would suggest you put your bid in now, because that's probably the only hope that you'll have of getting it filled, because it will come and it will go in a couple seconds. So that is the one thing that I would suggest right now, is just having some open stink bids. You never know what Boss could hit $2 again, $2 Australian again. The only thing I am just upset about is, I'm not upset about it, but look, I believe we have seen the pattern in the trading in this short term, and it is a swing trading pattern. So I think we will see July prices again. I don't think we're going to go below that. And it's like, it's sort of like one of those things, like, why didn't I buy Meg? I could not pull the trigger on Meg at 1150, because I was like, well, this could go to 9. And I don't know. I think that's just some not unexperience in that side of the things. I mean, I'm not really I show up to the comm meetings every now and then, but I'm not really a member. I'm just an observer, I guess. So, and some of the comm people show up here too, and we're always welcome, of course. They're always welcome, and it's back and forth, and I think there's some commonality here as far as we're all energy traders, like actual energy traders. So, I mean, we'll see. It's yeah. Oh wow. Yep. Okay. So Whitehaven hit a new 52-week high today. So that's fun. Granted, it's only 1 penny above 52 weeks, but I don't know. I would just say, I'm just looking at New Hope coal isn't doing all that great, but there's a couple there, but some of the things that I'm looking at are, they end up kind of being a little bit stronger than the others, but Oh, and Paladin is even on the day, or excuse me, Deep Yellow is even on the day. So yet another interesting stock on the ASX. I think that one, we'll see where that goes. That's an interesting one. Saw Silex today hit a low at 324. I'm gonna wait on that one. But yeah. So anyway, Uranium Crane, Iron Wing. Yes, good.
I was going to just tell you
before we get
that,
into the
a bit of Australia, a bit of Aussie news when it comes
Good.
to energy.
Thank you.
Our fuel excise was cut in half like 6 months ago or a year ago. It's ending next month. So our petrol prices are just going to increase by 22 cents per litre at the end of September. And that's, with what happens with fuel prices over the next few months, that's where you're going to start to really see the economy take a hit, I think. It's, the end of this COVID subsidy on oil, basically. So anyway, just that stuff like this is starting to happen. Yeah, I'm sure you guys don't hear about this sort of information over in the US.
I think he's cutting out a little bit.
Oh, can you hear me at all?
Oh yeah, go ahead now.
Oh shit, sorry. I was just saying that in Australia, our fuel excise is increasing 22 cents. All fuel prices will go up by 22 cents a litre. And if we still see further fuel increase prices, oil, increases over the next 6 months, you're going to get ridiculous fuel prices in places like Australia. So anyway, just more bear news, if that makes sense. People in Australia have less money to throw into shares like Deep Yellow.
Thanks, Irene. Yeah, I'm not necessarily bullish on gasoline demand, but I'm bullish on a lot of the other products.
There's there's definitely gonna be a lot there that I think is basically whatever Europe needs. That's what you need to be bullish on in the oil and gas space. So yeah, it's gonna get really okay. So just an anecdote, I guess. I was some of you may know that I shop at Aldi or Lidl, because I don't pay more for food than I need to. So, and it's all the same food. I swear it is. But the one thing I've noticed at Aldi is that a lot of the European imports have really dried up. So they are finding suppliers in the United States. All of a sudden, what used to be like Italian pasta or just things imported from Germany is becoming like Italian inspired or German inspired. I think that's telling me a lot as to where food prices are in Europe. That Aldi doesn't feel like they can import that to the United States and be cost competitive, which kind of sucks because I used to I got some. You still get them at Lidl, but just a lot of nice French, German, Italian food that you could basically pick up for cheap there at a very decent price, and that seems to be going away. So yeah, right, I just can't imagine what grocery bills up there are going to. So, yeah, and we're trying to cut fertilizer production because I don't know, they want to kill like 1 billion people or something like that. I mean, I think yeah, I don't know what that policy is all about, but it's Europe is going to be a really interesting situation in terms of energy demand, and I think there's going to be a real reckoning there in terms of the current leadership of Europe, and I don't know. I think the Green parties over there are trying to do as much damage as they can while they're still in power. And yes, I think they're actually trying to do damage because they have a very, very anti-human. These are the neo-Malthusians. They've found another thing to complain about or to declare the end times. It was we were going to run out of food in the 1960s, and today it's the climate disaster that is supposedly about to happen if we don't do something in 5, 15. I don't know. It depends on how bullish you are on the climate disaster. It depends on the date, of course. Not to say that climate change isn't real, and it's not something we need not be concerned with. Of course we do, but I guess the difference is that we actually give a shit about carbon and they don't. At least near-term carbon reductions, and that would be basically going to natural gas as opposed to coal. Having policies that would reduce carbon use, which you can do with fossil fuels. I mean, actually, fossil fuels plays a part in that, and I want to say that because we do have we have Illini here as a representative member of the COM, and I want to say that I want to be very nice to them and say like, hey, I mean, guess what? The biggest, the United States was the biggest. Had the biggest reduction in fossil fuels worldwide. Why? Because we basically replaced most of quite a bit of our coal generation with natural gas, which has the half of the carbon intensity. So, which is a heck of a lot more than what the German Green Party has done. I mean, they're reactivating coal plants. So I don't know, well, who gives a shit about carbon, or who cares more about it? So I don't know. And I think it's
So
yeah. Go ahead.
All I wanted to say to Europe is please, for the love of God, please don't burn those beautiful Lamborghinis for heat this winter. I'll trade you some kerosene for them. Please don't burn that beautiful wood furniture. I'll trade you some propane for them. Um, it's going to be really weird. I mean, the situation in Europe is just weird, and obviously we need to get as much energy there as we can.
Yeah, I mean, we in the United States, frankly, our policy should be to basically be just, we should be drilling in the Gulf of Mexico. We should be fracking. We should be trying to basically bring as much online as we can on, forward supply contracts at a very high price. I mean, this is the golden opportunity to, make the Permian, for another round of drilling in the Permian, another round of fracking, but locking in a high price to ensure that development will be profitable this time around. And that's probably eventually going to happen anyway. But, I mean, Jesus Christ, the foreign policy of the United States for the last 100 years has been, actually probably for the last 200 years, has basically been profiting on Europe's fuck-ups. I'm not kidding, I mean, just think about this for a moment. You want to know what the price was for us in going over and handling, showing the Nazis what was what? Yeah, we told the British that they were going to have to dismantle their empire. That was the price. We got that price. And the United States became the undisputed superpower of the damn world. So, I don't see why we shouldn't be doing this again. But then again, everyone apparently is under the thumb of whatever the hell his name is from the World Economic Forum, the
Schwab.
Yeah, the Wicked Witch of the East, as I call him. And there's Amory Lovins, who's the Wicked Witch of the West. So, God, could that guy just hurry up and die, please? I mean, I know he's not gonna. I know that won't solve anything, but my God, what an asshole.
He has a pretty good wardrobe. I like that.
I mean, he's just another German genocidal, asshole. I mean, these people literally want to kill 1 billion people. I mean, I'm not being, hyperbolic there at all. But what do you think is going to happen when all of a sudden, the Netherlands, which is the second largest food exporter in the world, where's that food going to come from? I mean, where do people eat? Where do these people think their food comes from? I mean,
Chapman, if we all hold our breath for long enough, carbon emissions will decrease. You got to hold it for 10 minutes, though.
Fucking hell. Tell them you first, exactly. It's I think if it's a I mean, I wish I was just kidding about this, but Justin Trudeau now wants to go down this same road. I'm sure the FDA and the EPA are going to try to, start regulating nitrogen too. I was like, when the hell did when do we start talking about nitrogen? I don't know. What does that have to do with uranium? Absolutely nothing. But so let's get back on topic here. Anyway.
Well, the way that you push back against it is you invest in oil stocks and you comply with their environmental mandates. You don't invest lots and lots and lots of capex in increasing production. You allow inventories to come down, and you force them to make a decision. That is how this gets resolved. This gets resolved when we run out of energy, when we run out of fossil fuel inventories.
And the uranium space is happening the same way, actually. I mean, it really actually is. Because Cameco is doing the exact same thing with the utilities. They are not front-loading supply. They've clearly sent a message like, yeah, everyone, we're only going to be at like 60% production capacity in 2024. And we're not looking at any greenfield or any brownfield development right now. We're just going to have to wait for a higher contract. And Cameco is going to make so much money, you guys. Their cost of production is $20 a damn pound, and they're going to be selling uranium for $90. I mean, Cameco is going to be like, you know, they're going to be, you're going to see kinds of like, you're going to see free cash flow yields like you see, like what's Meg's cost of production for a barrel of oil? Illini. Well, can you tell me off the top of my head?
It's got to be below 20, but I don't know it off the top of my head.
So if it's below 20, and Cameco's the exact same way, and they're selling uranium for 90, well, there you go, folks. I mean, that's you're going to see the kind of the free cash flow yields that you see from some of these Canadian oil and gas stocks. You're going to be seeing those in uranium. So
Chapman, how many pounds of uranium does Cameco produce every year?
They can produce upwards of about 25 million pounds a year, I believe. So,
thank you.
Yeah. I think their licensed production capacity, well, they can go to 30, I think, based on McArthur River and Cigar Lake. So, because I think the license capacity on McArthur River is like 18 million pounds, and I think Cigar Lake is like 15 or 16 or something like that. So effectively, they can push it to 30 if they want to, but they're going to be they're going to pull back on Cigar River. Cigar Lake. God, I hate. Could they just not say something with the water in the title? Just Anyway, as they ramp up McArthur River. So, but that's going to be a good thing because that's going to give them the structural ability to basically ramp Cigar Lake back up when they need to. But yeah, so they'll have their 2 tier 1 assets in production, and then at that point they're going to find there's going to be more deposits that they're going to find, and they're going to start development on, I imagine, within the next couple of years. We've seen the one that I'm really interested in right now is what it's ISO. I think it's ISO off the top of my head. Let me pull up my Athabasca map. You will notice if you look at ISO's come on. All right, zooming in here so I can get you the exact name of it, but I think it's Hurricane. Yeah, this might be it. So if you look, and you can do this. It's just a little, if you're not aware of it. So you can go to ISO Energy and you can go look at Laroque East. And I think that is the Hurricane deposit. And you will notice in their initial, they recently had, a couple months ago, I believe, they had the initial resource estimate. And you will notice there that there's basically that deposit is they've just sort of scratched half of it, and it's high grade, and if you it's sort of like it's very open along it's sort of dissected in half. Guess who owns the other half of that? It's Cameco. And it's literally like that deposit is dissected like right in half. I think you will find that Cameco has a certain way of going about things. So, for instance, they seem, anything that has like any sort of like prospect or promise, you will find that Cameco is literally right next door. And in that situation, it looks like Cameco might actually have the bigger share of that deposit because it seems to open up totally in Cameco's direction. And that's high grade stuff too, by the way. So I would be looking out for that one, and I would be looking out at ISO because I think as ISO, I believe, is the exploration arm of NXC. That's one way that I think NXC is going to get some funding for Arrow, is that they're going to potentially sell that deposit to Cameco, or they're going to try to anyway. So, anyway, just a little thing on the map that I was looking at. So, but yeah, other than that, it's about 11 o'clock. So I don't know if we want to wrap it up here. Alex, what do you got? You guys have any thoughts here?
Sorry, I'm just about to do some laundry, but I'm just, you know, the trade's going to take a while. It's going to take a while, and it's not it's not an everyday kind of thing you look at. It's just something being for a few years, so that's what I'm doing.
Yeah, absolutely. I think. Oh, sorry, Lana, go. Sorry.
I think, as we move through the next couple of weeks, I think energy is going to basically, we're going to be asking the question again of what happens when the freight train hits a brick wall. As you know, we just have sort of a very bearish macroeconomic environment overall for tech, for risk assets generally. We've had a big bear market rally. Now we're starting another sell-off. The Fed has signaled that they're tightening. But at the same time, we also have a really tight energy market, and something's got to give here. And what seems to be happening, at least right now, is oil seems to be breaking higher. And as goes oil, that generates a lot of other sentiment that tends to wash over into some other energy assets too. And that's sort of what I'm looking at. I think we're dealing with both a tight market in terms of money, in terms of liquidity, but it's also tight in terms of energy. And right now, it seems like energy might be winning the battle.
Yeah, I was sort of wondering.
And it'll be interesting to see if the sentiment washes over to uranium as
So,
well.
what do you think the near-term prospect of gas prices going back up, particularly before the midterms? Out of curiosity.
I have this like cartoonish image of like the Biden administration like freaking out and doing everything they possibly can in like this Wile E. Coyote kind of game to try and get gasoline prices down. But when inventories are this low, I'm not sure what's going to work here. I just it's like Wile E. Coyote versus Roadrunner, and I think right now gasoline prices have to go up. I'm not saying they have to set new highs. I'm not saying that, but I am saying that they've probably got to go up, by 25 cents, probably more like 50 cents by the time this is over.
Yeah, because the SBR is. I mean, we're entering in hurricane season 2, and surely they're going to want to leave something in the SPR for actual, like, I don't know, emergencies.
They're pumping all they can pump, chap.
I know.
The SPR
They're going to have to stop.
The SPR's withdrawal capacity is 7 million barrels a week, or 1 million barrels a day.
Oh my God.
And right now, at least the past, over the past couple of months, they've basically been averaging 7 million barrels a day.
Jesus. What I'm saying is they're going to have to stop.
There's no spare capacity left for hurricanes.
I know. Tell me about it. I mean, to me, it's like, they've pumped this so hard that they've basically played right into the Saudis' hands, and that just seems to be, I mean, I think the Saudis think that, I think they just, this is bullshit. Basically, they think the market is it's totally manipulation of the market, and I think they're calling, they're just calling it out, and I don't know, we'll see what happens. I think honestly, to me, it's like I think they're trying to screw with Biden before the election. I think that's
the Biden administration thinks that this is sort of a rhetoric issue that you can just talk the market down through browbeating it and berating it and telling it that oil prices are too high, and like the oil investors and the engineers in the room are saying, no, this is a physics problem. This isn't some sort of a politics thing. This is, we just don't have the molecules.
Yeah.
And it's, something's got to give here, and it's going to be an interesting couple of weeks for oil. I expect more volatility ahead. I think it goes up, but I'm not 100% sure on that.
Well, I mean, one of these days, these oil and gas stocks are just gonna have to stop trading like it's $50, like it's $50 oil. It's just not coming back, folks. There's no indication that I've seen. I mean, I heard, what's his name? Is it Sebastian? No, I don't know. He's an Austrian dude or something, or Austrian or Swiss guy. I forgot. Some European who was talking.
Alexander Strahel?
Yeah, there you go. I mean, I listened to his talk some time ago where he was talking about how inventories are actually quite high throughout the world, and that I think he was given the bear case for oil, but to me, the way I see it is just with Europe buying basically just whatever the hell they can get. I think it's crazy about, and it goes back to wanting to invest in Zim just because it's like they're gonna have LNG tankers, and Europe is paying whatever they can get for LNG, so you kind of wish it was uranium, but that's another matter. I mean, I was just looking at it today, and you take a look at electricitymaps.org or something like that. I think I forgot what that website is, and you could see that Germany's power demand, their remaining nuclear reactors are running at full power all the time. Now, I don't know about you, but that tells me that they need them, and we haven't even gotten to winter yet. So, I literally just want to say to those people, just, shut the damn things down. Just put up or shut up. Shut them down. Let's do it. I'm tired of basically trying to save these people. And I think too much energy is wasted trying to basically convince the Germans to do the right thing. They're very stubborn people. They have to fuck up royally before they change their mind. And I think I was sort of thinking about this the other day. I think I'll give you the hot take express right now, and that is within 5 years the Eurozone is done. I think the euro collapses within 5 years if nothing changes. And because I think there's going to be too many people that are just tired of the shit. And yeah, I think I don't know. That's
the euro is collapsing as we speak.
Yeah.
I mean,
I
take a look.
think,
it's trading. It's broken the buck.
Yeah. Oh yeah. Yeah. I mean, it's I would not be surprised to see. I mean, the Eurozone the European Union started as an energy trade, basically, buying and selling coal across nations. And there's, I think, a brewing disagreement now between the future of Europe. I think there are some Germans that are starting to see the light. I think, there's a CSU politician who's got a 3-3-3 plan, which is keep the 3 reactors online, restart the 3 that were shut down, and build 3 more. I thought that was just amazing. But again, it's just this is why I say that these green politicians are just trying to do as much damage as they can, because they do not seem to think, they're not acting in a way like they're not trying to placate this situation at all. Like I think they understand that they're not going to win the next election, and they want to shut down these reactors, and they want to run the acid wash through them because it's been their life dream to basically fuck up Germany, and they want these are the fun police. They hate people. They want to put a speed limit on the autobahn. I mean, I think they put that out as a proposal, like keeping the last 3 reactors online if you could get a speed limit on the autobahn. And I'm pretty sure that was seriously proposed. And they just I don't know what they want to do. I want to give these people. Oh, can we just give them, I don't know, the Faroes or some islands? They can go live there, someplace with a lot of wind. Give them a fair chance, all right? And they can go live their green energy utopia, and just, if they want to have an experiment, let them go have their experiment. Like I said, we'll find some place with lots of wind and some sunshine too. We'll give them a fair shake. And but the world will ban all uranium and petroleum product importation to wherever they decide to set up their little paradise. I think that would be very interesting.
How are they going to fly their private jets to Davos then?
Oh well, they'll take.
How's that going to work?
No, they'll have
How
to.
do they get to Davos
okay.
And discuss all their wonderful plans for managing everybody else's lives and managing everyone else's emissions.
Oh my God.
That's half the that's the attraction though, and that's where I think you're missing it, Chapman. Is that the at least 50% of the joy is in controlling other people.
Yeah.
Like if you set up your independent thing, it's like, well, what fucking fun is this? We're not like, putting our thumb on everybody. And
exactly
why, we need to go back and just make everybody miserable.
Yeah, I completely agree. That's why they haven't done this, because it's not that
But Chapman, karma is what you propose, which is basically that everybody else comes out and imposes Davos's plan for the rest of the world on the Davos.
Yeah. Oh, totally. Like
basically, we have all these people go out and cut their emissions. And irony of ironies, I'll bet you carbon emissions would probably go down 1 or 2%.
Yeah.
Just by having these people get out of the way.
Totally. Cal Powers, you got your hand up. What's up?
Yeah, thanks. I'm joining late, so not sure if you guys touched on this, but did you talk at all about like the large Bruce reactors in Ontario and the plan maybe to switch us to gas, or what type of effect that might have?
I think
how realistic that is?
I think you're talking about Pickering, I hope.
Exactly, Bruce Pickering, interchangeable.
Okay, all right, sure. Because I know Bruce is getting has gotten, they are finishing up their refurbishment of Bruce, which I'm going to go up to Canada soon in early October, and unfortunately I'm going to miss the tour of Bruce because I leave the conference a few days before that happens, and I'm really disappointed. But having said all that, I know the problem with Pickering is that they are slightly lower power than the units at Bruce. This is the only potential reason why I could see why they're trying to. I think also in some ways I have a small other theory in that the Canadian nuclear establishment is potentially trying to sacrifice Pickering to bring along their SMRs into fruition. We'll see what happens. Honestly, I think at the end of the day, Pickering is probably just going to end up being refurbished. They're going to have to make that decision here fairly soon. But they have plenty of time to do it because the crews that are refurbishing Bruce are going to be done here fairly soon. And once they're done at Bruce, then they can go straight over to Pickering and start right there. So
I'm very curious on your take. I mean, I could give you mine quickly.
Sure, please.
It's just a political thing, right?
Absolutely.
I mean, it's a time like life of plant cycle, right? I kind of relate it to like songs, right?
Mm-hmm.
So 30, 40 years, and then then you have the NIMBY, and when the time comes, to make decisions outside of that 30 to 40 year contract, you get all the rhetoric and the not in my backyard, and then it's easier just to make the gas switch on top, carbon incentives, etc. So it's more political, obviously, than anything else. I mean, it's a no-brainer to run the nuke from, a financial perspective. But do you think, have you seen that in other we're talking some of the largest stations in North America, right? This is not a small thing.
I mean, Pickering is, I think, what's Pickering's output? Jeez. I mean, Pickering has, they have some units that have actually been offline for some time. And Pickering was an 8-unit plant, I believe.
I think roughly speaking, maybe 2 gigs combined, something like that.
It would be more than that. Because they're 600, I think they're 600 each. So, let me look at this up here. Pull this up. So Pickering has 8 units, but 2 of them I think are offline. Wait, 2, 4, yeah. So
what about just more to that point, right? About sort of the politics of it, and if it's even economically, it's a no-brainer. But
it depends.
Do you think they will refurbish?
Well, I mean, it depends on who's in charge in Ontario. I mean, I think right now, I believe the Conservatives are in charge. I believe. I'm not sure.
Currently, yes. Yep.
And I think whoever Justin Trudeau's party was, they were actually trying to, they were trying to mess around, and then they found out. Because I think they got completely annihilated in the Ontario elections. I think, didn't they almost lose, parliament status in the regional parliaments? Something along those lines. But again, you do need, I think, national support on the broader stage. So it just depends on.
Canada's a very strange place politically.
Oh yeah, well you have all these fiefdoms. You have you have the
Well, Sunday night there's a term for this, but where you'd have someone would vote potentially for different parties, federally, provincially, and municipally. It's a very strange place.
Yeah, I mean, the politics of it is, it just depends on I think a lot of it comes down to the operator, how much they really, I mean, you have MB Power, who really has done whatever they can to try to do Point La Pro. I actually testified at the intervention concerning the license extension of Point La Pro. You can find that on my timeline. I was the first person to go too. Actually, it was the Canadian Nuclear Safety Commission staff spoke. Then the New Brunswick Power people spoke, and then it was me. I was like, oh my god, Jesus! All right, at least I don't have to go sit around for a couple days. But jeez, so that was fun. But yeah, I will be in Toronto here in October 3rd or something like that.
So maybe rephrase the question. Because if you're in the States, so my understanding is, Florida has a lot of nuclear power. So do you kind of see this issue coming up every few years, where these giant nuke plants are kind of, a la Songs or Diablo, and what are we going to do about it?
It depends on the jurisdiction. I mean, if you're in Georgia, let's say, where you've got Southern Nuclear, that's very bullish on nuclear in general. Those plants are staying online. I think you can say the same thing about Constellation, which is pretty much now a nuclear company. You can say the same thing about Duke. You can say the same thing about Dominion Energy as well. So I think if any plant has been shut down in the United States, they've been pretty much shut down in the United States at this point. I don't think we're going to have any more shutdowns. The issue really is going to be the new builds, and just the fact that we're just sort of really dragging our ass there.
Do you think it's even possible to build another Diablo or Songs? Are you talking sort of the small modular? Or?
I mean, it's after Vogel, which we have built in Georgia. And Vogel is happening. The Unit 3 has received permission to load fuel and power up. That one, they're not stopping that one, okay?
And what is the capacity there?
About 1.1 gigawatts. So both units would be it's an additional 19,000 gigawatt hours every year, so quite a bit.
Wow.
Which I think is about that's Pickering puts out Pickering puts out 23,000 gigawatt hours.
But
So
I'm pretty sure Pickering and Bruce combined are the biggest.
yes, yes, absolutely. The largest Bruce is definitely the biggest. In terms of, I think, raw output, because
That's crazy to me. So you think that this Georgia one you're talking about, so they'll that's 30 years.
Georgia
1.3.
is. Let me see. Georgia's
The
going to
largest in
be,
the United States is Palo Verde at about is 3 reactors.
but
Palo Verde and
but
Arizona,
Vogel 1, 2, 3, and 4 is going to be about 38,000 gigawatt hours every year. So that could potentially be the largest. So,
but those are ending their life cycle within the next 5 to 10, if I'm not mistaken.
They're Vogel 1 and 2 were built in the 90s. They came.
No, Palo. Sorry,
Palo Verde is going to be. They came online in the late 80s. They're going to be online for another 40, 50 years at least. There's actually no reason to shut down. Nuclear plants don't have the kind of life problems, basically, or the sort of the long life. So the annual output, by the way, for Bruce is 48.1 gigawatt
so
hours.
why do some utilities, say, like California ISO or Ontario power generation, then have this 30 to 40 year view, like you're saying that's not the life cycle?
Because that's what we've always assumed it to be, but we are finding out that it's not the case. Basically, the idea, nobody actually knew how long essentially a nuclear power plant could operate. But over the last 20 years, we have effectively discovered that through feathering of the pressure vessel, which is a process that you go in, you basically sort of water blast it, essentially. I think that's the best way to put it. I'm not totally familiar with the actual process, but essentially there's no reason why you would actually ever need to shut down a plant. They could theoretically run forever, to be honest.
Well, I'm thinking about it, and to your point, I guess you say no one knew. I guess we didn't. It's fair, we didn't know, because we haven't had these units of this size for more than those 30 or 40 years.
And I mean, the CANDU units are a little bit different in that they do go through refurbishing just to basically change out the pressure tubes. And you have some updates to the calandria, as well as I'm sure they do some updates to the online refueling system and that. But effectively, those are really cheap. You almost actually get like brand new reactors when you change out.
Almost
the
like you
pressure
knew
tubes.
what I was going to ask. I was just going to ask if you had an opinion, like relative to the cost of the unit, these refurbishments are like nothing.
Oh
right?
yeah,
it's not like
they're much cheaper.
Oil and gas or anything.
Because,
it's like a rounding error.
Yeah, well, the biggest issue with a new build is just how long it takes to be in generation. So, for instance, if you are Bruce, where you're just basically refurbishing maybe 1 or 2 units at a time. I mean, Bruce is another 8-unit plant, but they have the bigger CANDUs, which is the 800 megawatt ones, instead of the ones at Pickering, which are the 600 megawatt variety.
Is this Georgian one that you're referring to? Is that ocean cooled or
no? That's cooled by the Savannah River. So
do you have any? My follow up was then, do you have any concerns there, like other places in the world?
Well, they have cooling towers.
Go down.
Well, they do have cooling towers. So if the biggest issue that they would run into there is that the discharge into the river gets too hot. So you can only raise the river temperature by a couple degrees centigrade before
for sure
before you start running afoul of regulations.
We're actually seeing that on the Athabasca River with some of the oil sands plants.
Yeah,
up in Alberta, we're seeing that.
So, for instance, in Tennessee,
concerns there though?
Not really. You can get around that. So, for instance, in Tennessee, you will find that some of the nuclear plants that the TVA has, they have cooling towers, draft cooling towers that are very expensive, but they only run them in the summer. So because you can just do run of the river cooling, which is actually what France does most of the year as well, when their rivers are very very cold to begin with. So
in simplistic terms, you're saying you fill these rivers outside of summer, or fill the tanks, sorry, outside of summer, and then use the water when you need it.
correct. You can. There's plenty of ways to cool a plant. You can have a reservoir on site. You can go to draft cooling towers. You can do multiple forms of backup, various kinds of cooling methods to ensure that you basically stay within the regulations. There are a lot of options, in other words.
So do you or maybe Alina have an opinion on why, whatever you'd call that region, because I'm a Canadian, but say in Georgia and Florida, there's an appetite for nuclear, and not other places like California or wherever there's not?
There is, historically speaking, in California has basically been the bastion of the anti-nuclear movement, and that's mostly because the Brown family liked to sell oil and gas, and there was some sort of alliance there. This was back in the old days when oil and gas company is when there's a thing that I really wish that the nuclear community would just get over, and that is that oil and gas companies are not against nuclear, because oil and gas companies primarily sell products regarding plastics and transportation. They do sell some.
Well, especially oil. There's no
Yeah.
correlation. I mean, gas could be a direct competitor, but
Well, I mean, even in natural gas, where you're starting to see natural gas used in shipping more and more, as actually just fuel for ships. The appetite for it in Georgia is also based on just how power is regulated here as well. So you would see, this is an integrated resource plan state, as opposed to more deregulated markets. So, for instance, our nuclear plants in Georgia don't have to basically shut down when
it's also a fancy way of saying that the state benefits.
Well, I mean, I would say everybody benefits, because ultimately what you get is actually cheaper power, believe it or not. There's a study, actually, I think we have somebody in one of the chats, on one of the uranium chats that was, went to, I think it was at Creighton University, and he did basically a study on regulated and deregulated states, and he found that the regulated states not only had more nuclear and more lower carbon power, but they were also cheaper. So essentially,
Well, and they also benefit from the proprietary, trading around said generation, right, in and out of state.
Well, I mean, look at basically what they do at France. Where basically if you have wind, there's a lot of wind blowing that day, the nuclear plants have to shut down. It's the nuclear that has to be curtailed there, not the wind. So, and this was the very same problem that, you were starting to run into in some of the Midwestern states, where you just had, this race where, Illinois would try to dump their,
the best example of that might be hydro in Washington, where they actually were getting paid. There was negative pricing, so they were getting paid to stop running hydro because, wind was heavy at times, but typically, still.
And this is where, this is where you get a lot of people that start talking about wind and solar, and they're academics, okay? They've never run a grid in their life. They don't know what the fuck they're talking about. And I know I'm sounding, really, like, frustrated there, but frankly, these people need to shut the hell up, and people need to stop listening to them. Because
it's so true. The problem also is that people have no idea how complicated the grid system is. Right?
I mean, it is a very delicate balance. People have no idea that as power is generated, it is consumed. There is no
zero storage, right?
There is no.
That's what you're saying. But
yeah,
I'm
exactly.
not even talking like within, say, Georgia. I'm talking about the interconnectivity of not even within Georgia, which is probably county to county a nightmare. But then you
Well,
start
not necessarily.
state to state, etc. Once you know,
I mean, there's some
the tie lines
interconnections.
are.
Yeah, there is some interconnections, and it's actually fairly close to where Vogel is. I believe the interconnection within, like, let's say South Carolina, and there is also, I think, some power that goes down to Florida. I think there's a municipality in Florida that technically bought some power from Vogel, because Vogel 3 and 4 is owned by like 4 different people, and I think.
But to your point, too, right,
4
about
different
academics.
groups. Yeah.
Academics and intermittent power, they don't understand this problem of
Well, here's the problem.
Distribution.
Well, here's what they actually do. They have equations, and they come up with these wonderful ideas, and then they start plugging basically when their models start failing. So for instance, they'll assume that all of their high voltage transmission lines that nobody wants to have built in their backyard are going to be built. And then it gets even worse when they start assuming, 100% hydro availability like all the time. And then they don't assume any extended periods of Dunkelflaute where
correct. And what they probably also can't model is the tie lines, right?
This is
connectivity.
what the wind and solar people are trying to do. All right. And this is how you could basically just shut them down almost immediately, which is to say, can you predict the weather like 3 months from now? Oh, well, you can't. Okay. Because this is what they're trying to do. They're trying to predict the weather on March 20th, 2043. To like the hour. They think they know how much wind is going to blow that day. That is basically, if you can't
listen, man,
exactly.
I've traded, energy at Genscape, who I'm sure you're familiar with. They can't even predict it 24 hours in advance. With
and we've
any
gotten
type of
pretty
accuracy.
good. But yes, I know exactly what you're saying. I mean, in terms of, so for instance, also by the way, you can go and you can take a look at a power plant called Wolf Creek in Kansas. That one does not have any cooling towers because it's just cooled by a fairly large body of water. So that's another sort of example of cooling options, basically.
Which I'm just trying to think about my geography here, though. But which in Kansas, there's probably a reasonable assumption for runoff, right, to fill that body of water. In Georgia, I don't think you're getting any, snow cap or runoff.
Yeah, I mean, it's basically it seems to be like a creek that basically fills into or rivers that that fills into this this impounded lake. It's dammed basically. But it seems to stay pretty full. So because
that's what's so wild about Bruce and Pickering, right? You've got like an infinite amount of cooling ability from the Great Lakes, and still you're potentially thinking about transition.
Oh God, I know. Or transitioning to a different cooling method.
No, to gas was the run.
Yeah, I mean that's the idea is that they would do more renewables, but oh, I'm sorry. Did I mute everybody? Shoot, never mind. That they would do more renewables, but that just has turned into be frankly a disaster for Ontario. They saw power prices just go up through the roof.
They tripled their provincial power prices.
Yeah, exactly. And I think that was what led to the near annihilation of the Liberals. Anyway, we got hands up here, so whoever was first, just go ahead and go.
All right, you guys are boring the shit out of me. I'm sorry.
I'm sorry.
Very interesting. Very interesting. No, I put out a tweet today that just was like, it's. I'm interested in the energy and those energy discussions, but I'm, I think that I wanted to try to bring it back to uranium a little bit, and one of the things that I just wanted to point out to people is that we've been talking a lot about tonight about the production, and I think that there's an inference that once contracting happens, there's contracting, and then there's actual production, and then there's a third category that when the equities will go up in price. And those things all just don't necessarily line up. And I think that folks should take a look, in terms of what they're expecting and when. If you look back in 2005, that's when actually the first big contracting cycle started in that cycle. And in 2005, when the spot price was about, I don't know, $30. When it was about $30, then you had 250 million pounds were contracted in the long-term market. And I'm looking at a chart of, if you Google uranium contracting volumes and price history, and what you see there is 2005. It's UXC's. I can't remember the name of that.
So, Cranium, while you're looking that up, what you're talking about here is sort of like that big sort of China cycle, right? Where coal was going nuts. They're building everything. Uranium's going nuts. Anticipating all this demand. But do you, in terms of your equities, what you're talking about, sort of, relative to spot or forwards, like, do you have any fear about, some of these large scale plants shutting down? And how do you play it? Like Sprott or
which large scale plants?
Like Pickering.
Say potentially like a Bruce, Pickering, shutting
yes,
down and switching to
absolutely.
gas, right?
I think that's the entire. I mean, and certainly I understand that would bear on the bull thesis, right? And I am interested in that. I think that you hit the nail on the head. That shutdowns are literally like 50 times more important than new builds. I've been beating the drum that all this talk, and this is why I don't enjoy talking about nuclear rah-rah, because those builds, at least in the US, I mean, if somehow, I enjoy like counting the reactors that come online in China or places that move fast, maybe India. I like to hear about that stuff. But, talking about a Western style renaissance almost makes me nauseous because of what I know is actually going on, which is to say, you can't you can't talk when I talk.
Oh,
so when
Brett, be nice.
when I hear no, it's just I'm trying to get a point in. Is that my point? Is what you're saying is actually is hits the nail on the head. When they close reactors, then we have a problem because that affects demand. That affects what ultimately would be the build out. The amount of production that we need to plan for. That's a real dynamic and moving thing, and but what I'm trying to say is that and I wasn't really touching on what you were saying, Kapow, but I find that what we really need is the spot price to run up again to get action in the equities. In the times in the past when the equities moved, it was because the spot price was moving, or it was also because that broad markets were moving. And so in lieu of broad markets moving, we need the spot price to move. And that doesn't necessarily coincide with the production let me not confuse that with the contracting of large volumes of pounds. In fact, you could make an argument that spot market will peak right after large quantities of pounds are contracted, perhaps in part because the marginal producers coming online will finally push that price up quite high. That's what happened in both 2007 and 2011. The years preceding those peaks both had 250 million pounds contracted. And so we're all kind of getting excited about the contracting cycle and that is exciting. But I just want it to be, as usual, I just want it to be a little bit more of a deeper analysis and to say when do we really make money? And I'm trying to figure that out, and I don't think it necessarily happens as fast as people think just because the contracting happens. The contracting is different from the production, and it's different from the price action. Those things don't all necessarily align. So just something to I try not I do try not to talk a lot in the spaces, and so I just waited to the
I have
end.
a couple follow-up questions for you, if you don't mind talking some more.
Yeah. And I'm sorry. I used to be a full-time police officer, and whenever I would talk to people, if they were trying to interrupt me, that's what I say. Like, you can't talk when I talk. Sorry.
Well, man, if you're on enough of these spaces, there's kind of two ways they work. One is, you put your hand up and wait your turn, and the other one is kind of a more flowing conversation. To me, it was the latter, but anyway, so all good. I'm trying to think about. So the first question was easy. I think I was going to ask you your thoughts on Sprott, if that's a great way to play uranium. I think they're one of the largest open market purchases of uranium. So U.UN, and then the second one would be a little bit longer. You're referencing sort of '07, 11. Those are both like China sort of driven demand cycles. Um, so say oil and gas, for example, would be completely different now, right? Where you don't have the supply market ramping up, relative to demand. And so, and I'm all about making money too, man. I'm a trader.
Yeah.
So like, how do you view uranium in that sense relative to oil and gas? And what are you
Right.
investing in?
I think that other people. Sorry, I was going to say that I think that other people would probably be better at responding to the question about trading Sprott physical than me. I don't quite get I'm not that sophisticated of an investor that I can play the discount to the actual spot price as published. That's like it's kind of like two moving parts that I don't really get. I'm much better at kind of understanding what the price histories are of the various shares, and thinking about when I want to be involved and when I don't. What I would say
Okay,
is that
fair enough. On Sprott, I
let me
think
just can I
my
just
understanding.
finish
You
one
bet.
other thing.
You bet. You bet.
Let me just finish this one thought. Is that when you were talking about 2007 into 2011 and China, that part I'm also and haven't contemplated it in that way. But what I do know is that the equities popped in 2007, and then they fell with broad markets after that. They fell quite hard into 2009, and then they started lifting, or at least the quality producers started lifting, chiefly among them Cameco, into 2011. And if you look, that actually perfectly tracks broad markets at the time. And then what happens to spot price and certainly all the equities is that after early 2011, of course, between enrichment and Fukushima, everything just goes to crap. And so what is interesting to me is I really wonder what would have happened post 2011 to the spot price and contracted volumes, all that sort of thing, if Fukushima at least hadn't happened. It would have been a very interesting study, because at that point there was a negative decoupling. There's most certainly a decoupling. The spot price and the equities really were tracking the broad market, and then because of what happened, it just fell away and took its own course, much lower. So it's I look at that kind of price action. I look at the contracted volumes in that time period, and then I look at after 2011. I'm like, it's just an unfortunate situation. We didn't get to see what happens longer term over a more healthy cycle. So
Well, you might have your chance here, right? Didn't Japan just turn on another 9 reactors or something like that?
They'll have another. Uh, I think it'll be up to like 17 or something like that. Something. Yeah, I think that's about right. So
just such long cycles, right? Like ironically, I kind of cut my teeth trading power, so I have a good understanding of all that coal, new costs, all the inputs, and certainly kind of saw coal to gas switching, wind, and solar come on, etc. But I find it personally uninvestable because such a finite amount of buyers and there's so much government interference, etc. Like I find oil so much easier just because there's so many end users, there's so many buyers, etc. And gas is becoming sort of that new oil, in my opinion.
So let me if you do trading view, or well shit, I'm looking at Cameco here. Damn it, that's the wrong thing. All right, 1 second. Let me get back to you. Carry on, please.
Tubman, am I wrong just in that general thesis?
No,
that it's almost uninvestable compared to other energy industries? Or?
Wait. What's uninvestable? I guess. I'm sorry.
Personally, I find uranium uninvestable relative to other commodities like oil and gas.
Okay.
Even though I have a good understanding of it.
Sure.
Because it's just so
now I get the question. All right.
A finite amount of buyers, and it's so complicated.
All right, so here's the thing I was thinking about uranium the other day, is that it's a very small slice of the market, let's say, and there's not a lot of buyers and sellers into it, which means that even though it has, fairly high floats because quite a few of them are basically essentially there's not a lot of institutional ownership outside of, say, Cameco, when they tend to move like really hard and fast because it's just a small market. So this is the sort of the thing that actually it does play into, an idea of a bull market. I hate to use the word squeeze because it's not a squeeze because no one is shorting fucking uranium. Stop calling it a squeeze, please. Sorry. Anyway, beyond that, it's. So you have a fairly tight market, yes. And here's the reason why I have a major hesitancy on the things that I recommend on selling and buying to people. And that is because when I first got into this trade and started trading this, the one thing that I noticed was there was hardly anyone around, save for maybe Gnostic, who was around for bull cycle, 07. Like,
well, I think when you guys are talking 07, it actually was started 04.
04.
Right? 04,
well, sure.
04,
05, yeah. But basically the 2000s bull market, there was no one around, to basically, tell you how that one went. So this is why I immediately went down the rabbit hole of trying to learn as much as I could from history. There was a lot of proven reserves articles on there that I wrote just all about, things that I discovered how, what happened. Because the other thing that I was told was I lost a lot of money in that time. So it sort of explained to me like why there wasn't anyone really around. Like even the people that have been like long uranium in this cycle, like we have some people that tell us like, oh yeah, I bought my first uranium stock in 2014. Like, oh, okay, that's really interesting. 2014, basically, at the bottom of like the last disaster. So there are people that make money in this trade. Yes, it's the Rick Rules of the world, and the people that are able to buy warrants and are able to get like long dated warrants. That's what they try to do, so they can get those warrants when the mine is in production, and one day, and they can make a huge amount of money. This is why I think due diligence is doubly important for retail investors, because frankly we don't have that opportunity. Now, is there outsized gains to be made here? Yeah, I can tell you all about one that I've made this year called Silex, something I recommended and I told everyone to buy. And guess what? That one's up 170% or something. Like even today, I think it'd still be up quite a bit, even after this little, sell down a little bit. I think what are we down today? What? Come on, pull up over here.
What's the ticker on that channel?
It's on the ASX. So if you trade internationally, you're good. But if not, I suggest getting an IBRK account. But you're an experienced trader, so I imagine you would. SLX on the ASX. And that one has a lot of room to go because that one's never been diluted. So when you see the historical prices there, those can actually absolutely be a reality again. So as I was trying to think about here, when I'm going back and looking,
but I would just add, it is an investable space if you stick with Cameco. It's investable in terms of you can safely leave money in Cameco long term, which is otherwise known as an investment. There are few investors everybody here is with the the really small cap plays are just trying to sell out to somebody at a higher price. That's totally different. But I think that number one, it's investable with Cameco, and then I would also say that you can certainly make money if you treat it like a meme stock investing space. Not that that's healthy for anybody, but we went through that in 2020 and 21, and that was fabulous. I mean, people made fabulous sums if you took your gains, or you took some gains. So, if you herded yourself into the same things that other people were herded into, and then you all moved up together, if you took gains along the way and then realized gains at the top, you would make, I'm thinking of one that essentially was a 40x. So show me a 40x. And I think that broad markets going from, 675 in March of 2009 up to 4,800, that's an 8x, essentially. That's ridiculous. That's absolutely ridiculous. And so to get an 8x in broad markets is, this is not a proper comparison, but historically, anything that would, there's nothing that approaches a 40x. And that's, and I just saw that. I made a bit of money in this trade. I'm happy. I've learned a lot. And if I had left, one position alone and had taken the whole 40x, that would have been quite something. But now I in my mind, I certainly have a sense of what drives this trade, and it's the smallness of it. It's kind of like the argument that silver pops harder than gold because it's a smaller market, and it's true. Well, uranium is a smaller market than silver by far, and so there's money to be made. There's money to be made in it, but I think that I'm like Chapman. I just think that Cameco is an amazing company. They so thoroughly understand the space that they're in, and they have tentacles in everything that possibly could move. Nothing escapes it doesn't matter if it's like the production of uranium from as a byproduct of fertilizer to any possible way that you can they have, the only thing they don't do is enrich it literally. But everything, they're investable. They're an amazing company.
To your point here around meme versus long term, I just pulled up Cameco against CNQ, kind of basically one of the largest oil and gas guys in North America. So 1 year, CNQ 72%, Cameco 43. 5 year, surprisingly to me, Cameco 187, CNQ 76. But then if you're on a max, which looks like maybe start at 2000 ish, then CNQ dominates 1400 versus 350. So I guess kind of to your point, maybe it's somewhere in between, not meme, not super long term, but maybe you're trying to hit that.
Well, Cameco, Cameco is like I said, I don't know if you were here talking when I was saying about Cameco earlier, where you know, their cost of production is about $20 a pound. The same thing for, you know, you look at some of those oil companies, there's some analogous there when there you go, like if their production is $20 a barrel. Well, if Cameco is going to be selling for $90 a pound, we also have to remember that Cameco's got value-ons beyond that. They have conversion capacity, and you know, that's another $16 to $30. Then they have enrichment capacity, and then that's basically another. That's a lot more money. They're going to get enrichment
Just like
capacity soon here.
I would not recommend holding, you know, CNQ over, you know, any longer than sort of a 5 to 7 year, you know, cycling commodity. So to me, it's just harder to pick that.
You would be, your holding cycle in Cameco would be 5 years. So I think so.
Just to your point, also around hesitancy to, you know, recommend names or whatever. A more general comment. I was laughing when you said that because, you know, I've, you know, a lot of friends, I've given them picks, and when I give them picks, and you know, they make 200-400%, maybe even 9 or 10 here in oil and gas over the last couple of years. Well, it was, you know, their idea, or they were, you know, they take credit for pulling the trigger. But if you're wrong,
oh God, you'll
wrong,
never
right?
hear the end of it.
So you
exactly.
can't win, right? Either they're right
exactly.
and you're wrong, or you're wong and you're wrong. You can't win by
people will never stop reminding me that I told people to sell centrist tanker LEU back in May, when, you know, on a in the fundamental analysis would still tell you that that is a dead stock walking, and it's. I don't know.
Well, it's just the funniest thing about money, right?
Yeah.
I mean,
but,
like
you know, I can't control.
Your friends,
yeah, exactly. You know? And I can't control what people buy. You know, the thing about Sprott you were asking about. So, you know, I was learning a little bit about the VIX the other day for the first time. I have not been trading for a very long time, but I was sort of learning about the VIX, and I guess the VIX is. It seems to be, from my understanding, basically, you know, I don't know why it's traded on the market. It seems to just be purely sentiment. All right. So I guess I'm selling some of my, you know, sentiment to you, and you're buying it, and this is the VIX. It's like, why?
Well, the important way to think about VIX too, but it's sentiment based on the options that are trading. So it's even it's like it's a sentiment on derivatives. Actually, and I just learned this on another space recently. If you look up the VVIX, another ticker, that would be more sentiment around equity volatility, whereas the VIX is sentiment around option volatility.
Oh, Jesus. Okay, so that's fun. So what we've seen in Sprott, just a little bit, is that it is slowly kind of diverging from the spot price. So, for instance, if you were to go and you take a look at the uranium, the UEC or the UAX one on the COMEX, you'll start to see that, you know, you see the large moves up in the spot price, and you see that, you know, reflected in Sprott. But slowly but surely, you know, it's becoming more of a sentiment trade a little bit. So, for instance, since July 18th, the spot price is only up on the futures contracts by about 5%, but Sprott is up 30%. So
I haven't even looked. I'll go pull up what is it, contango or backwardation for the UEC quote right now?
You'd have to explain those terms to me, because I don't know.
Oh,
I'm sorry.
Is it more expensive to buy uranium right now or in 2023 or 4?
I would think it'd be. I believe it's more expensive in 2023, 2024. Sorry, I don't.
So
I
that
don't
would
deal.
be healthy
I don't
for
deal
a
in
commodity.
jargon.
That's what you want. You want it to be cheaper now and more expensive later. Otherwise, you can arbitrage kind of via storage. And I think that, to my understanding, that's what Sprott basically is trying to do, right? Is be the storage for uranium.
Well, they're trying to basically become just a physical trust that trades on the value of that trust. But Sprott uranium will be sequestered there, in theory, forever. It will never be sold, essentially. Now, my value investor brain Now I'm talking about Sprott, so Gnostic is bound to show up at any moment now. Um, but the is it the way that it essentially works is that for people that just want to buy the physical and they just want to own the theoretical value of the physical commodity, it's not a bad way to go. Now, yeah, I mean, for me, I think you might have like, frankly, the way what I see in Sprott is maybe 2 or 3x leverage, but in the mining stocks, I see like 6 to 10 or something like that. I mean, I think it's a style of investment for people that just like to hold the physical. That's fine. It's not for me. That is one of those things that I would just say not for me.
That's interesting. It's almost like a royalty then, kind of almost.
No,
what you're
well, we have a
describing.
royalty company called
In
Uroy,
terms of leverage, then.
but
Okay.
yeah, I mean, it's not like a Franco Nevada or anything else like that. There has been some suggestions as to ways that they could create a revenue stream by basically renting out pounds potentially, to let's say some to make up shortfall that you'd rent out those pounds, and the pounds would have to be given back eventually, with other pounds, let's say. So but there is a company called Uroy. That's also one I keep an eye on it, but I don't invest in it, and I haven't, just because they don't have any where their near-term cash flow is. I just don't see it yet, but they're sort of trying to become a Franco Nevada of the uranium thing. I mean, the thing about getting in on uranium now is also not only you're looking to this bull market that will occur over the next couple years. You're also getting in on the ground floor on what could be essentially a longer term part of the energy transition. I mean, you talk to people that that really get to that bring the physics to the equation, and basically the world is in a transition energy wise. It's in a transition to uranium. They just haven't realized it yet.
How about from a trading or an investing perspective, say? So the way I look at, say, my oil trades,
Sure.
right? Which, I mean,
There's tons of volatility in uranium.
energy is basically the only thing up this year, right? Everything else down.
Pretty much.
If you think about inflation at 10%. So basically, if you're not earning 10%, per annum, you're losing capital.
Yeah.
Right? Kind of fair to say. So some of these longer term sort of uranium plays or warrants, like how do you think about that in terms of like the cost of capital, where you're sort of getting a 10% decay per year in the value of your money?
I mean, almost investing in energy is like, in my opinion, to be you're actually I think you're completely immune from inflation, because effectively energy is the currency, in my opinion. Maybe less so with uranium, more so in oil and gas, of course. But the dollar, the Canadian dollar, the euro, wherever you are, the only thing a currency is basically a claim on future energy. That energy could be in the form of oil, it could be in the form of work done for that exchange of currency. But effectively, whenever you have, any time that we've only ever had an inflation crisis is when we've had an energy crisis. I don't think any does, it doesn't have a lot to do with anything else. We've been printing money like nothing else, and we haven't really had inflation until this past year, and that was because we started to have an energy crisis. And so I have that's a bit of a monetary theory for you, of course, but I do think that you're going to get that kind of return in uranium that you're seeing. I mean, assuming you're not, could just investing in just total stupid shitco's and investing in the memes, but if you're an active trader, I mean, there's a lot of volatility in it, and you can totally make And if you're willing to do the options, Jesus, I mean, there's huge upsides in there. I mean, just taking a look at the Cameco options for the last 2 weeks. I mean, it's like puts were up the last Friday, not the last Friday, but the Friday before last. Were up like 150%. Well, last week calls were up like 3,000, and were up. Sorry, the puts were up like 1,500% at one point, and then last week, it would be this week. Some of the calls were up 3,500%. I mean, it was just that you'd see like the where you'd see that go up there, like Cameco went up like 20%, but the real money was made in the options. So
where like weather or storage numbers might be driving natural gas,
sure,
say volatility, which is more, as I think you talked about earlier, right? Energy, you can't store. That's why it's so volatile, right?
Yeah,
then gas, you can't store as much as oil. That's why it's a little bit more volatile than oil, etc. So what would be sort of like the driving factors for the price difference in uranium, similar to say like weather or storage numbers for gas?
Well, the price, the factors for uranium is ultimately going to be supply. You may have also heard about this bifurcated market that we're going through. It sounds like you're kind of new here, so this is good. We have the bifurcation of global supply chains. The most important factor for that doesn't necessarily matter for Canada so much. Because their reactors run on either depleted uranium that comes out of light water reactors, because it's about 1% uranium at that point, or they just run on straight natural uranium in the CANDUs because they use heavy water. But everywhere else in the OECD, we use light water. So we have to have uranium enriched to a higher assay level of the element uranium-235. The principal source of this enrichment for the OECD comes from Russia. So without it, effectively, we have to go through a process called overfeeding. And that basically means putting more uranium in the machine to work the uranium a little less hard in terms of how much you spin it, essentially, because we use centrifuges at this point. Silex would be using lasers to enrich it. And you have to basically double the uranium usage. So that's not sustainable. It means we're going to have to dip into inventories, but also the uranium that we do end up producing to make low enriched uranium, would be more expensive. And this is the key difference between this cycle. And I'm sorry, I just want to say one thing real quick. This is the key difference between this cycle and 07. The 07 cycle was also built upon this idea that we were going to have a major expansion in nuclear power. That did not come to fruition, but we are seeing that now. We do know that France is ordering. I know that as much as it just pains Brett to talk about this, but yes, future reactor builds are actually incredibly important for the demand, because you have to start putting in those fuel orders now, because you need to know, particularly if you're having a large build out, that, oh, by the way, 10 years from now, you're going to have the mines on the line that are ready to supply that, uranium to the supply chain.
Is that upgrading like similar, like maybe analogous to like refining of oil? Is that investable? Like, could you invest? Is anyone publicly traded sort of that specializes just in upgrading?
In upgrading, or what do you mean? Upgrading, like
well, you mentioned that a lot of the upgrading currently happens in Russia. Is there anything in North America?
Yeah, you could invest in basically Silex or Centrist, and I would just do Silex. But you'd have to invest on the ASX. There's an over-the-counter ticker, but it trades by appointment. It has no volatility. It has no volume whatsoever. So unless you're happy and just putting in a bid and just waiting for it to fill, you can go about it that way. But
very familiar. This is why a guy like me so much liquidity in oil and gas, and
Yes,
I
I
just
know.
see it as a better short-term investment. That's why I stay away from coal, uranium, etc.
Well, coal has a lot of coal has quite a bit of liquidity on the ASX now. I mean, you can see.
Oh, for sure, Whitehaven. I mean, there's
Yeah,
liquidity
Whitehaven.
even in North America, but
Well, I mean,
uh,
the thing is, like, for me, where I actually prefer, frankly, investing on the ASX than I do on the NYSE. Just because
why is that?
I the uranium stocks over there, I know what they're gonna do. I can feel that market out a bit better, and I've had I have made twice as much money in Australia than I have
Do you
in.
still have like pension and fund flows in Australia supporting your investment versus over here where you don't have, that's kind of gone now?
They would have to. I would have to have some of the Australians here to answer that question, but I would imagine the answer to that question is yes. Quite a bit of their pensions are supported by coal, from my understanding, or maybe not. Actually, no, they divested from coal. So, but it's been so that's why Whitehaven has had such a remarkable run, because it's basically all retail just piling into that. I think it was the last conversation that I had with Iron Wang about that. So, but I think there are some of the larger ones, like you might have some institutional ownership in Paladin, but maybe I don't know. At the same time, it's I just I can feel that market out a bit better, and so it's just one of those. It's just a preference, but it's sort of like I was thinking about buying BHP the other day, and it was so weird because it was like, oh my god, I was buying something on the ASX that has actual liquidity. It was it's like, what in the world's going on here? I don't like this. I just want to, I want to put my bid in and just wait for it to fill, and
So you're like what are we talking here? To like, are you swinging like 10 G's, 100 G's? Like, what are the blocks we're talking about?
I would say 10. I'm in the tens, not the hundreds.
But then that 10,000, like nominal $10,000 could move the share price that much. Like, that's what you're.
Well, I mean,
it's very, very small cap then, right?
So well, you're speaking some trader terms to me, and I'm not totally trader. So I don't know. Somebody help me out here. Jeez.
Well, just that nominal $10,000, right? So you're saying you're trading $10,000, maybe. Okay, let's say tomorrow you decide you're gonna, nominal 10,000 Australian dollars, close enough on the exchange.
Well,
Let's call it, 8 to 12.
Yeah.
So when
I'm not totally like day trading, I would say. What I would do there is some of the things that I'm holding are, they are either they're long term when I'm happy with the basis, or they're essentially short term if I'm just looking for a quick 10 to 20%. So there is a lot of volatility.
Amazing. So what I'm trying to get better at actually as well as sort of having a nominal cash amount of my portfolio and executing, and then just not trying to watch it 15 minutes for the remaining, call it 80% of the portfolio.
Oh yeah, I understand that, and I end up doing that anyway. I mean, I just kind of just to watch things just to see what's happening every day. We got a hand up here, so let's get to Uranium Gatsby. I'm sorry.
Yeah, Chapman.
Yeah.
Can you hear me?
Yes, yes, I can hear you.
Okay, yeah. I just it's not really a question. I just want to get your opinion and your thoughts on the Palisades nuclear with Holtec's proposed plan to bring that back online, and with the regulatory hurdles that they may have to encounter to bring that thing back online. I just want to get your opinion on that.
Is this Diablo Canyon or wait? Sorry, what was that?
This is Palisades in
Michigan.
Michigan.
Palisades, yeah. I'm sorry, Brett. We're gonna have to talk about reactors again.
Sorry,
I know.
Off topic,
no. Oh, please, I love talking about this stuff. So, I know Holtec has talked about bringing that reactor back online. That would be quite a monumental challenge in that a reactor that has gone offline and the license has switched to decommissioning license has never been brought back. There are people that do want to see that reactor come back online. And if natural gas prices do start to go up, I think there's going to be more effort to bring that reactor back online. I mean, the whole civilian nuclear credit thing that was initially passed. This was before the Inflation Acceleration Act was passed.
Yeah, correct.
That whole amount of money was literally just for Palisades. I mean, they literally like passed that law to try to save Palisades.
Are there any physical constraints, like you were pointing out before? The life cycle could be way more than 40 years. So once it comes off and it's decommissioned, other than like paperwork, what is involved in sort of then getting it back on?
Well, effectively, it's almost treated like a brand new reactor, because you have to go in and you actually have to certify the whole thing, essentially. Because so you'd have to go in, you'd probably have to do hot testing. It would probably take at least 2 or 3 years at least, of just, going in, doing all sorts of upgrades that, whatever the NRC tries to get you to do. It's a bit of an unknown process in that it's just never been done. There is no like way to bring back, mostly because, once they do the acid wash, this is what they do. When you shut down a reactor, you basically you flush the whole thing with acid. In some situations, they get really spiteful and they actually like drill a hole into the core itself, which is the total death kill there.
Yeah, that's like a heavy wash, right?
Yeah. Well, it's not even. Yeah. You have the heavy wash, yes. A light wash, you can probably bring the reactor back from.
Right.
But you still think it's like hypothetically, say like songs, right? So if they didn't do this heavy wash, 2 to 3 years is best case scenario.
Probably, I would say 2 to years. I would not guess anything shorter than that, just because it would be such a new regulatory process, and the NRC likes to take their sweet ass time with everything. So
there's a lot of regulatory hurdles that they would have.
Completely. A huge amount of regulatory hurdles.
That was my thinking.
Unless you basically just had the Biden administration come in and just say to the NRC, just like, look, just treat it like it was just shut down for refueling.
Treat it like it was wind or solar. We'll give you a bunch of money and tax credits.
Pretty much. Well, I mean, they're doing that anyway, but with nuclear.
Jokes.
This point. Yeah, I understand completely. So, that's it's who knows.
And what's your thoughts on Holtec's plans on building a gigafactory for SMRs? That sounds pretty promising.
I wish they were traded publicly. I'd love to buy them.
Yeah.
I think Holtec has an interesting place in the nuclear industry in that, they are the people that do the decommissioning. Now,
are there any existing SMRs in the States? Or?
Well, not. I mean, you want to go to the Navy? There's plenty of SMRs.
Okay, so but not within uranium gas. The only thing I would point out to you is we brought this up in some other spaces. So the current CEO of Cenovus Energy, Alex Pourbaix, talked about SMRs and how it'd be a great way to power the oil sands, which it would.
Yeah, totally.
But
using the steam.
But I'll just point out he was also involved. He was like a VP or high up in TransCanada in 2005, and those same SMRs were in the queue that he's talking about right now. So I just point out that we're 20 plus years later and not a fucking thing has happened. Hence my question around: are there even any existing?
Well, the BWRX 300s, the small boiling water reactors that GE Hitachi is doing, those seem to be moving forward.
And what those are like upper limit 80 megs or something like that?
Those are 300. They're 300 megawatts.
Yeah.
New scale is about, I think, 150 or something like that. So there is I'm very bullish on the SMRs. I hope that look, if they build that Holtec is doing what I have been screaming, literally screaming for, what I'm going to tell the SMR people up in Canada to do, which is to build the damn factory.
Exactly.
But Chapman, you know what? It's interesting, like you were talking about before, sort of the academics around wind and solar. Like, it's a complete no-brainer, right? The technology is a no-brainer, but it's trying to sort of. It's not the academics; it's the politicians. It's trying to convince them, that this is viable, right? Which in my personal opinion, is just impossible based on, say, that other example in a market that's very electricity deregulated, power forward, and it's been 20 years in the queue.
So I will say that one of the latest surveys that I saw of utilities is that they are considering adding about 90 gigawatts of nuclear power to the U.S. grid. And this would be basically through the deployment of SMRs, and it would happen probably starting in earnest in around 2030. And yeah, I mean, look, their SMRs, they are like a perfect strap-on to coal-fired power plants, where you basically just you drop them in practically. Same amount of power output, same cooling requirements. I mean, they're perfect functions.
And you have
the demonstration one will be in Wyoming, I believe.
Yeah, and Wyoming is they are definitely trying to move forward with that, and they happen to have a lot of uranium there too. So, but
because that's the problem, is that all the coal plants are built around coal reserves, and you could truck in the uranium, but at least they have the distribution available, right?
Sure.
From those coal plants.
Yeah. I mean, the SMRs, I was asked this question, and it's not that the SMRs will actually really directly affect the bull cycle in terms of the price of uranium, but they will affect the sentiment. And they will affect, essentially, look, in my opinion, within probably a couple years, you're either going to have a movement, or there's going to be basically you just need a president that is going to get up on the bully pulpit and demand, I think the Inflation Acceleration Act is probably going to be repealed in 2024.
Wasn't it? You said Inflation Acceleration.
I refuse.
It was called the inverse.
I refuse to call it the Inflation Reduction Act because it's such bullshit.
Will I get kicked out of this space if I talk about geothermal and how that might be a more viable alternative?
No, of course not. There's applications and there's technology for that. But that hasn't been with geothermal. That hasn't been. There's technical challenges. One of the technical challenges with geothermal is being able to. You're drilling into hot rock deep down.
Yeah.
And we can drill down small holes, but the technical challenge is to be able to drill large, wide holes in deep hot rock. That's the technical challenge. If we can overcome that kind of technical challenge, that's geothermal is
Just a couple points. Okay? And keep in mind, I'm a trader. I like to action, and invest in these ideas. And again, my point around sort of the small nuclear reactors and how they've been in the queue in Alberta for 20 years. Well, there is a company called Futura who's bringing 21 megawatts of geothermal online in October in Alberta. It'll be the first in North America, so it'll be interesting. And again, just to my point, it's not sort of a fantasy. Like, this is a reality in the next 60 days.
No. I mean, there's
and so I'm just curious on your guys' opinion. Like,
there's plenty of places that have used geothermal, but it's usually in
Europe.
In Iceland in particular. Where you have a lot of hot rocks that, let's say, are maybe closer to the surface. But
I guess my point is just like an actionable idea that's actually happening
I think,
here online in 45 days versus.
I do believe that there's a place for it. Absolutely, I think the heavy lifting is going to be done by uranium. And that's not just me, basically wishful thinking here. I mean, it is going to come down to, and I think it's going to be the most ironic thing is it is going to probably end up being Holtec that ends up, being the major winner here because they're building the damn factory. And, this is going to be, I think a lot of the people that have invested in NewScale, look, I think NewScale is going to fail. I'm just going to come out and say that. They're going at it at the entirely wrong approach. They're basically trying to build nuclear the way that nuclear has always been built, which is they are trying to be designers. Okay, we're the designers, and the designers do one thing, and that is make everything cost 10 times more than it needs to be. Do you know what Holtec has done in the nuclear industry? They are the only people that have ever been able to hold the line on cost and, in fact, reduce them because they are the decommissioning people. And you know what the decommissioning people get? They get a set amount of funds to just do something, and guess what? If you don't do it, well, then you're either on the hook for it or you just don't get invited back. Their profit is based on, you get that decommissioning fund there, and then whatever's left over, some of it might be split with utility, but they get a big chunk of it. So they have a huge
I'm not
incentive.
really following. You're saying they're getting money for decommissioning, turning plants off, but then...
Which is hugely profitable.
But then, in turn, they are then going to, reinvest?
Oh, yeah, sure.
Or that's what...
Yeah. I mean, these are people that like to make money. And,
right. Well, I think they also see an opportunity that there'll be more decommissioning than
potentially.
Commissioning.
I doubt it because they're trying to exit the. I mean, they have more reactor. There are reactors that have been shut down now that, frankly, the decommissioning on them hasn't even started because they don't even have enough people to get to them, and they're just sort of slow rolling it because the money's there and it's and they have a set process and that's how they go about it. But for them, these are people that know how to make money. So when they're getting into the building reactor business, I think they're going to win. So, we'll see.
I'll just say, man, Chapman, you obviously know your stuff, and other speakers in here as well. It's amazing, but I'll just throw it out there because that's how I am. But I wish you were right. I think the technology speaks for itself. It's a complete no-brainer. But I think potentially you might be location biased based on where you're at. Like I've seen, strange things happen out here on the West Coast in regards to nuke and coal that were insanely economic. And then,
oh yeah, totally.
The introduction of carbon tax, carbon credits made people go another way. And NIMBY, in nuclear's case.
Yeah,
so
totally.
Fuck, man. I want to agree with you, but my money will not let me do that.
I will say that there are people that get it. And there are economies that are going to invest in it. I mean, look at Georgia right now. There's a big giant plant from Rivian. I know, God, I'm sorry. I know I'm having to bring up Rivian. But look, Rivian is planning to build a $5 billion production facility here. Why are they coming to Georgia? Because we can guarantee the power. It's not going to Texas. It's not going to California. It's coming to Georgia. Why? Because we have nuclear power. And that lesson is not going to be lost on people for very long. And, we'll see. I mean, there's been...
And I wish that was true, but if you look at, states that develop natural gas, they'll be like, a state that has an abundance that won't allow it, and, next door to a state that's doing it.
Okay, well, then why isn't Pennsylvania just, booming right now? I mean, you could say the same thing there. So, and they have tons of natural gas.
Well, that's kind of my point, right? You need the right, politics in place to execute, and that's why, God, man. I mean, and again, you don't have as many buyers. It's not as liquid as gas or oil, and I wish it was true because it would change everything. I mean, God, if North America just got on board,
it will eventually, but it's a matter of time. It's a matter of when, not if. Because eventually I completely agree with you, and I get that it's frustrating. I mean, for me, it's, you know, the message that I'm going to have for these SMR people that are working on these, and Jabroni, we're going to get to your question just real quick, is that I'm going to tell them that, look, there are, thousands of people, a lot, and tons of retail investors and tons of sophisticated investors who are ready to invest in your product because they believe in it. You need to have a plan and something that's actually going to work. And if you have to start being like a little bit more real and stop being so nice, we frankly, we all try to play a little bit in nuclear. We all just try to play like too nice with wind and solar, and we try to pretend that oil and gas is the enemy. And it's sort of the opposite case. Like, we just need to be ignoring wind and solar and cozying up to oil and gas. Because everybody I talk to in the oil and gas space, they all believe that we're going to uranium. It's just a matter of when. And they want to invest in it.
One or two publicly traded utilities, right? Like Portland General or Pacific Gas. One of those guys to come on, and then, you may be right. A lot more will follow.
But there is a, like I said, I will point to that utility survey that I saw that, there is interest there in adding the SMRs. So, again, it's just a matter of, what I've said is that in the past is that the SMRs have to meet the market where the market is. And the market wants, like, you can order a wind turbine and you can have it in 2 to 3 years, I imagine. So you need to have the same thing with nuclear. And you need to get build times down to 2 to 3 years. You can't have 5-year builds anymore. You can't have 6-year builds. You definitely cannot have 10-year builds. You need a product that can do a 2 to 3 year build. And the only thing that can do that is an SMR. So, Jabroni, what's your question? Sorry. Or what do you want to say?
Yeah, no worries. I just kind of got in here, so if I missed some of the stuff from prior, I apologize. But I was just wondering, I have a pretty good position in SMR.
Mm-hmm.
It's one of, it's not my only holding uranium by far, but I actually agree with a good portion of what you're saying. My question would be that, you're from Georgia, and, I think that, like, my read on it was, that political risk is just very underappreciated. And, like, Georgia, like, as jurisdiction, specifically, but there's other states as well, it's shifting, like, and the trend is not seeming to go favorably. So that's kind of like my question to you is, like, how do you measure this, that in your calculation when you're talking about what jurisdictions are going to be safe? Because, if you look at Canada, they're in many ways worse than Africa. Like, I feel more comfortable investing in certain African countries than in Canada when it comes to mining.
Yeah. I mean, so...
As a Canadian,
sure, please, go ahead.
Handle this.
No. Yeah.
Jabroni, I would ask, just first, you said you're invested in SMR. We were trying to, is there actually anything live? Like, what is your investment? Is there any live generation in SMR?
I'm just talking about, I bought some shares. I'm not saying it's like a, $10,000 position or something. I just have, I threw a couple grand down on it.
But what is the company, and do they have like a live plant?
To my knowledge, there's a Wyoming, and I mean, it's been quite a while since I've even done any DD on it, because I threw this back in, I want to say last year, and I don't know if you guys know this, I travel extensively for work now, so, like, my uranium portfolio has been on autopilot for 9 months. So this, kind of, when I jump in these spaces, like, I'm not by any means an expert. A lot of my intel on some of these tickers has been pretty dated, and so.
No, I was just asking, like, when you talked, the small modular, as an investment, like if there was something we were missing in terms of
What
it
got
being
me to want to
live.
do it was that I felt like it was a little bit of a diversified, maybe a little bit more diversified from the other mining companies I'd had. The other thing I liked about was, what I'd read up on some of the strategies, and it didn't necessarily seem like there was anything proprietary about, what their approach was, but, I'd read several instances where, they were looking at targeting, these coal plants that are already basically wired and connected. And if there's a way to do that economically, then I think that there would be.
So
Like
just
Kevin was saying, like, go ahead.
well, just trying. So I used to trade like Alberta electricity and off of a lot of the largest coal plants in North America. So Sheerness, Keep Hills, probably 5 to 6 gigawatts of coal power. I traded California ISO when it first started trading and implemented a lot of wind and solar. I traded around Songs Nuclear. So I know my shit when it comes to trading power and electricity. So, but just your comment on the Canada relative to Africa. So where I live in Alberta, it literally is probably the most advanced electricity market. It's deregulated. It's the most investable market in North America. And we were the first to implement a carbon tax well before California or anywhere else. And because of that, you had a lot of the coal plants, shut down and switched to gas well ahead of the rest of the market here in the West, I guess, all of North America. And we also talked about these nuclear reactors and how they've been in the queue since kind of 2005, 2006 in Alberta. And actually, they make the most sense here out of anywhere because you could put them kind of behind the fence and use them as clean energy and offset kind of like your carbon credits when you're mining, say, for oil sands or any type of like emitter and offset and kind of collect the carbon credits via the nuclear reactors while you're, mining oil via oil and gas. So, but even though it's quote unquote viable and should have happened, it's been in the queue for 20 years and it's not happening. But what one local oil company is doing is using geothermal technology to capture. It's a combo geothermal gas project, which will then capture carbon and then re-inject. So they'll get paid to capture the carbon, and then you also get enhanced oil recovery benefits when you're running the gas side of that geothermal. But just to educate you a little bit, when you talk about Canada versus Africa, we probably lead energy technology up here in Alberta. So I guess I took that the wrong
I
way.
guess I will refine what I'm saying is not. Go ahead. Who's talking? I can't tell. That's what, yeah, I'm not talking about technological capability. Like, so, like I would be more, as fucked up as it sounds, like I would much rather buy Russian oil companies than say, like British exposed like BP. But that's sort of like what the concession there is these Russian companies have access to, the Schlumberger's and the, oil service, Western, more advanced. Like, there's more to it than that. I'm just sort of being.
No, I understand what you're saying, and in fact, virtually every oil field services company has left Russia.
Exactly.
I think Schlumberger might have like a well or something left, but they've all left, and that's part of the reason or thesis that people think Russian production will come down. But okay, I see your point. Political risk. Here's my retort. Okay, so a third basically of all of the money within the last this calendar year that's gone to Ottawa has been via oil and gas revenue here from Alberta. So we've seen this before. We actually saw this ironically when Justin Trudeau's our prime minister now, when his dad was the prime minister, Pierre Trudeau. We saw the exact same thing. There was actually a national energy policy. People fucking went crazy. They can talk a big game. Nothing will change. I guarantee you. And money talks. They're not going to take away a third of their revenue.
Yeah, this is something I like to say. The money is made in Saskatchewan and Alberta, and it's spent in Vancouver and Toronto. So,
and not even so much in Vancouver because BC has a lot of natural gas and mining as well. It's spent in Ontario and Quebec. It's spent in Quebec.
Well, I mean,
basically,
like
and then some.
it's sort of like like the Dutch example where they say that the money is made in Rotterdam, but it's spent in Amsterdam. So.
But I mean, what's his name? Jabroni's bringing up sort of like a valid point.
Oh,
I
totally,
guess,
totally. I
especially if
get
you
it.
don't
Yeah,
live
yeah,
there
yeah.
and you don't know. But
Not
they do a
discounting
lot
that.
of job owning, and like there's a perfect example, right? Germany just came over here last week and was begging for LNG, and Trudeau was talking about hydrogen maybe 5 years
Oh
from now.
Jesus.
But
Well,
but the reality is it doesn't matter. Like these guys just job on. He's not gonna cut off 1/3 of his income, and we'll keep doing what we're doing. We'll keep advancing technology, doing what we're doing, and sometimes especially in the energy thing, I think the market is so slow to advance, and even when
Oh
it does
yes.
advance, we might take one
Absolutely.
step forward, then we take 2 steps back. I mean, Germany's turning on coal. They thought they were past that. So
No, they're not just
energy
turning
is
on coal.
very
They're turning
slow.
on lignite, which is even worse. But
Right, and burning heating oil and wood. Like energy is very, very slow moving. There's a lot of job owning. People have to talk about it. But at the end of the day, are we really going to go to 3, 4, 10 times our energy pricing like Europe did? No, our
no, we're
politicians,
not.
I don't think, are that stupid, and
Well,
we're
no, I
coming
mean
too
not
close.
with the kind of high energy lifestyle that we enjoy and not the and I say high energy lifestyle not like it's a bad thing. No, it's the high energy lifestyle that we enjoy in North America. We are rich beyond our wildest dreams because of it. We live we live better than royalty did
Oh, and
200
one
years
last
ago.
point, Jabroni. I'd encourage you go check out Josh Young. He's a guy who
Yeah.
invests in oil and gas out of
I
Houston.
follow Josh like regular. I mean,
Well, he almost exclusively, or at least his preference is to buy Canadian companies because he feels like they're undervalued. Maybe because of
Oh, totally.
the kind
I
of
think
comments
so.
you're
Yeah.
making. But Trudeau won't be here forever, and pretty
Oh,
soon he'll be
he's
gone,
gonna
and
be
you'll see kind of
gone.
our guys
well,
rip. Is my opinion.
So I guess a lot of just so we're clear here, I invest a lot of my mining companies are based in Canada. So like I'm not like saying I don't or that's like some sort of like anyway. The point being is like I don't understand why there's a heavy like tendency amongst investors to kind of ascribe like rationality to politicians because this doesn't exist and we see examples that everywhere around us. I mean, the Biden administration, case in point, they have like been falling up the stairs their entire administration. Uh, Somehow you have Trudeau still there. Like that is incredible to me. The fact that he is even like in the position he's at right now.
I
is
apologize
amazing.
if any type of rational thought around politics equates to my investing or what I was describing, because it does. I hate politics. I don't give a fuck about it. I just know what will happen with the price of commodities, or at least like to think I do, and invest according to that. And these guys will have to follow suit. I mean,
But do you guys like think that like it seems like what you're arguing, and I could be misreading it. So if I am, I apologize. It just seems like you guys are sort of like assuming that in the end there will like the people who actually do this stuff, like that make that make the decisions will make the rational one, which will ensure that we continue to have supply chains that are strong, we have ample commodities, and that the pricing mechanisms don't become like you guys just said like we won't see what's happening in Europe. And
well,
I'm asking, why do you feel like that at all? Because I would totally disagree with that assertion.
because I think actually potentially Canadians are more rational than Americans. I mean, you are the guys that just doubled down on intermittent power, not us. So
On what? What was that? I didn't hear the last part.
Double down
Biden
the Inflation
Biden just
Acceleration
doubled
Act.
down on wind and solar.
No,
Not us.
exactly. I'm like that's my point is that like we're seeing examples globally of leaders that I mean, if you want to look at like the biggest example of like a nation state essentially committing suicide over successive terms is like Germany. I mean, Germany, Merkel was she. I mean, you guys. I could go on about Merkel for a while, but I mean, like these people in these positions, I don't think many of them even, if their eye is even on the ball in terms of, let's just say, energy security. Like
It's just very different examples. Okay, you have to think about, say, if the states, like if Texas provided 1/3 of federal revenues for all of the United States, you better believe whoever is there at the end of the day is they'll jawbone, they'll go back and forth, but they won't cut off that money. And that's basically what happens in Canada. Alberta provides, especially like during these times, more than 1/3. And typically, when commodities are high, the U.S. dollar is more, at par or potentially. Right now, the U.S. dollar is so strong, we're collecting like
So wait,
10,
you're
15%
saying
more than we should.
you just said, I mean, you literally just said Texas, and Texas has been like destroyed because of policies that both the federal and local governments have put, basically biting off their nose
I'm
to
just
spite their
trying to
face.
provide an analogy where if Texas provided 1/3 of the federal income in the states, which is what Alberta does, Ottawa,
Right.
people can say whatever they want, but energy will rule here. Like, there's no way around
Okay,
it.
so here's another example, because I mean the Texas one is a good example because Texas is a very strong, very large, economically populous state. It's one of the best, biggest ones in the United States, and the policies that have been pursued by several different levels of government have done nothing other than try to basically work against that economy, right?
We're in
So
the exact same situation, man.
no, I know, and that's my point. And so, and if you look at California with water rights and agriculture, the amount of economic weight that the agricultural industry has in that state, and yet they do things that are completely counter to that as well. So I don't think that these politicians are making these decisions in any way that is like coherent or rational in the long term. They're making political decisions, and then they're dealing with the fallout in the economic sense by essentially just reacting and flailing. And I think
Because
people should
my
be
point to
expecting more
Canada
of
is
that.
it's a little bit different because one tenth, so Alberta's 1/10 of Canada provides 1/3 of the income for the government. So they have to bend. And also, the political terms will last 4 to 8 years, and then we'll get swing back in some type of balance. I mean, the U.S. it's a little different here for oil and gas. I'm not coming to that, but I think you will see things the pendulum swing and come back. That's kind of just what politics does.
Yeah.
Yeah, I mean, I get what you're saying. I think we mostly agree. I think there's just maybe some differences in framing, but
And I also I just hope maybe or think we're not in North America just separating Canada and the U.S. Like I hope first of all we have energy abundance that Europe doesn't have, but I also don't think we're that stupid where we would allow ourselves to get in a situation where we're going to be paying unnecessary rates. Like we build infrastructure, we build around energy. Yes, we're dumb, and we do a lot of quantitative easing and a lot of dumb shit from a financial perspective. But when it comes to energy, North America kind of dominates, right? We're net exporters. We figured out like we won't be hurt in that situation.
Yeah, I mean they're trying to, but obviously, we'll see what happens. I mean,
despite
look,
their best
the
efforts.
Inflation Acceleration Act will be repealed because I think this is just temporary, and it's become sort of in vogue to basically try to repeal whatever the last party did.
You're only the second person, Chapman, I've heard talk about that. Have you heard anyone else talk about that possibility that it could get repealed?
Oh, I think it will absolutely be repealed. I mean, I think
I could see that
mostly
for sure.
because it's Biden's signature accomplishment, and the Republicans will love nothing more than
the other guy. But you're in good company, by the way, because the other guy was Danny Moses of Seawolf Capital or The Big Short. I didn't actually even think about it, where he's saying, "Oh no, like it will be repealed for sure."
No, of course it's an entirely asinine waste of money. I mean, it's literally doubled down. It's doubling down on the stupid policies that has gotten to us to this point. I mean, it's the Texification of the American grid is what it is. And we have spent just an ungodly amount of money on this bullshit. And people, you can't, you know, they're the reason why they're just throwing so much money into offshore now is because no one wants to see, one, like all the good places to put windmills, the pinwheels for adults have basically been done. So there's really no place to put them anymore. And even then, nobody wants to live next to them because they make a metric fuck ton of noise. I mean, and you know, and now you're having these like, I mean, they want to talk about like, you know, just natural impacts to the environment. I mean, it's just Jesus. They had to put like these huge concrete pilings. I mean, nobody makes money on offshore wind because it's hugely expensive to put it out there. I mean, you're literally having to like sink something the size of the Eiffel frickin' Tower out in, you know, 100 feet of water or something crazy. I mean, it's just ridiculous.
Yeah. You know, the other interesting thing will be, you know, talking about sort of life cycles of power projects. Apparently, it's going to be a huge issue figuring out like how to recycle these things at their 7 to 10 year lifespan.
Exactly. And they're all coming up to their Earth. Their uranium Gatsby, jump in anytime, please. But they're coming to the end of most of their lives. You're starting to see more stuff like there's other things that are far more insidious, frankly, like water heater standards that have that are connected to the grid in terms of like demand load, or what they call basically you've had enough electricity for today. Just absolute, just no. I will have hot water when I damn well fucking want it. I mean, just no.
Well, do you know? I mean, but you don't think that's where they're going?
Oh no,
I mean,
that is
I
where
think
they're trying to
setting
go. And you know, they want to have like these stupid, you know, I like my smart thermostat. I like to be able to, you know, not have to get up to change my power or change my temperature inside my house. Or if I'm out on a walk, I could have the house nice and cool when I get back home. But I will damn sure never give that over to the utility so that they can turn that down for me because I've had too much electricity today. Fuck you.
Well, and in Georgia,
Fuck
that probably
you.
will never happen. But you know, in Germany and other places, they just take over. They're just like, nope,
No,
you're going to be, 80 degrees at night.
That will never happen here. You are taking, you know, look, we in America, we have high energy lifestyles. We enjoy, and you are not. That will be a bridge too far. You know, all of a sudden.
I don't know, man. After COVID, I wouldn't put anything past it. I think people here are pretty fucking
Well,
weak.
After
I agree
COVID,
with you
after
in
COVID,
Georgia.
though.
I agree
After
with you in
COVID,
Georgia,
though.
but you know how they also can control it? Brownout.
Oh God, I know.
Yeah, you may not have a choice,
Good-
man. This
good
is
luck
the thing.
there.
Like, you think they're gonna ask you nicely?
Now, why do you
hey,
think-
Mister, you use too much power? They're gonna cut the shit off.
Well, why
man.
do you think? Why
you
do you
don't have a
think?
choice.
All of a sudden, what's his face? The pretty boy out in California, governor. God, I forgot his name. It's
Governor Newsom. Yeah.
Yeah, Governor Pretty Boy out there. Jesus.
He always reminds me of that like Ace attorney guy.
God, yes, he does.
Yeah.
Jesus Christ. Why do you think he's like, you know, just totally reversing course on Diablo Canyon?
That's hilarious. He definitely is for the animals.
Because he can't.
He's for the animals.
Well, he can't get rid of 8% of their damn power. I mean, they're already struggling to keep their power
They're
grid
trying
online.
to with Diablo, but yeah.
Not only
Man,
is it,
Look.
yeah, it's not only the 8%, but it's like
The 8% that's always there.
It's base load. It's base load power.
Yes, it's the as I was telling some
Like,
people the other day.
It's the first 8%.
Yes, it is.
Right, and when you look at baseload, you basically almost like that would be essentially 20% of the market in a weird way when you're talking about swing. So you're totally right.
Oh yeah, I mean it's I don't know. I mean, but he's totally reversing course out there because they've already had for like I think the first time in several years they've had rolling blackouts again out in California, and yeah, I mean, that's I think.
Listen, guys, I like this space is amazing. I love to learn, but I would just point out everything we've been talking about. Everything is bullish natural gas. You know, nukes potentially starting off, coal starting off, natural gas. Applying more intermittent wind power, then you need the peaker units to back that up. Bullish natural gas. You know, building LNG for all the problems elsewhere. Bullish natural gas. And that's why investment wise, you know, I can't even look at uranium because there's so many good
natural gas
plays.
has been. I mean, what? So you're looking at Fang or man, what's Fang done lately? Cause and I was in.
Also, so Chapman, while you're kind of looking that up, I got to take off here. It's pretty late everywhere.
Oh yes, I'm sorry.
I just want to let you know also on Tuesdays, it really depends on the day. So you're going to do it Tuesday night, right?
Yeah, we're planning on doing Tuesday at 8, but it won't be this next Tuesday, but it'll be the Tuesday after that. So it was
okay.
So yeah, I'm amazed you guys are still going, man.
Oh hey,
you guys were doing this space for a while. I checked this on the airplane before I took off. I landed and I was like,
we're still here.
They're still fucking going.
Oh, I know.
Thought.
Yeah, this has been 5 hours.
Yeah, I know. I'm sorry. We're getting. We actually still have quite a few people here too, which is amazing. So, obviously,
it's pretty good though. Yeah,
just means it's good combo.
Well, yeah, we're good for the background, I guess, and I think.
So I guess since Uranium Gatsby's up here, one of the last things I'll say before I go is, so you think Azincourt's a pretty good play, and what's your thought on that, if you don't mind sharing?
Well, what they've been drilling and what they've been receiving, they've come across what's called a halo, and it's mineralization. And so, like, I think that I don't know. I think they're onto something. They're vectoring in on something here. I mean, it could be nothing, but it's worthwhile putting a percentage of your portfolio on it to it. That's just my thoughts.
Okay, cool.
I agree with Chapman. I also wanted to say, like, I like when you said oil and nat gas should be like kind of working more in line with maybe the uranium sector having, I don't know if they could even, I don't know if this would be possible. It might be a stupid idea, but like if you had some of those, oil super majors who then, bid in and put a, part takeover or ownership stake in some of these mining companies as a longer term diversifier, that would be interesting. I mean, I don't know if that would actually make sense, but you know, well, right, yeah. I mean, this is stuff that down the road or whatever. Yeah. Well, they know what to do with it. So like, I talked to a guy, what's like Kinder Morgan, and I was having dinner with this guy. He's like one of the head people who works with like the government liaison. So he is like kind of like guy who has to go out to the government offices and shit, and like it's like basically a lobbyist. And I mean, he's telling me just how out of touch the people in these like they don't understand like at all. The level of competence is like amazing. So I was